Good morning, everybody. It's Wednesday and it's time for another midweek trading session. How's everybody doing? Who do we have with us here? I can see Louis again, as always. Welcome, mate. Good to see you. Unbiased trader with us this morning again. Good morning. Hope you're doing fine. Bang, bang, gang. Good morning. Good morning to you as well, Marks. And we have... Oh God, how do I pronounce that? I'm sorry, I don't think I can pronounce that correctly. We have the FX King with us today. Show us some pips, FX King. We have Infinity with us this morning. We have Tony with us this morning. I'm here as well. How's everybody doing? I hope you guys are doing well. Quite a surprise, in my opinion, what we've been seeing here the last days for the new year, because it's kind of like in everything rally. If you ask me at the moment, we have metal surging, we have the Dow Jones and the S&P 500 that made a new all-time high. So quite rare actually to see a new year starting like this on such a positive note. In my opinion, quite unique. So if you look at this here, just another all-time high yesterday in the S&P 500, not far away anymore from 7,000 points. Crazy. Who would have thought that just 8 months ago when we dipped down to under 5,000 in the S&P 500. NASDAQ still lagging a little bit behind, but I'm sure sooner or later we'll catch up. Also, again, a lot of news this week from the exhibition coming out about AI from the likes of AMS, from NVIDIA, and so on and so forth. So quite interesting to see Dow Jones also not far away anymore from 50,000 points. Even Bitcoin trended a little bit higher, but gave it all away again yesterday. We saw the picture in Bitcoin that we've been seeing for quite a while now. Asian session buys, and then as soon as the US session joins, we see Bitcoin dumping again. Good. Let's see what we have here in terms of news coming out today. We have inflation flash from the European Union coming out. Later, we have ISM and PMI and the very important JOLTS job opening, which are going to prepare us a little bit for the non-farm payrolls that are going to be released on Friday. Yeah, let me quickly scan here through everything to look if there's anything promising trading-wise already, or if we have to be a bit patient first. We can also have a look at my option scraping strategy platform. So let's analyze here, for example, euro dollar, that's kind of interesting, actually. So we have a max pain that is just slightly below our current price. So max pain for the New York cut options expiring in euro dollar today is at 116.73. We are just a little bit above that at the moment. So that could be interesting. Maybe we are going to see euro dollar gravitating for the next, 5.5 hours, a little bit to the lower side. It's not always like this, but let's see. Yeah, as you guys know, on Monday, I officially started a new evaluation account here with the Fivers, a high stakes account with $20,000 on it. We are now in the first evaluation phase, of course, and this is going to be traded with one of my automated strategies that stems from option trading. So this is the front end for the whole system you're seeing here. And every day at around 12 p.m. Central European time, the system is going to scan for certain things that are happening in the option markets. And if it finds some stuff opening, automatic positions, which are then closed 4 hours later at 4 p.m. CET. It has been live for a couple of days now. It's not really moving anywhere, so we are still hovering around 20,000 US dollars, but the back end works here. All we have to do now is to be a little bit patient until a week or 2 or 3 weeks are done already to see if this system works as well as it is promising in the backtest and forward validations I made with the system. Let's scan through a couple of more here. It's kind of interesting from the side of an options trader, what we're seeing right now in dollar yen, for example, because we have still expiries that are expiring for the next days now that are very, very, very far away from the current price. So currently you see we're sitting at 156.50 and we have options as low as 140 and 144 with massive, massive volume expiring. So that could skew things up a little bit. But as I said, later at 12, so in about 1 hour and 20 minutes, we will be able to see if there is something valuable or if my system here decides to take some trades. And as always, every Monday, every Wednesday, I'm going to share with you how this progressing. Is it really working? Or is it maybe one of those strategies, that look good in the back test and you did everything to make sure the strategy can actually earn you money, but then in reality, it fails to deliver. All right, let's have a look here at some charts first and have some coffee. Yeah, gold. And of course, even more interesting, silver, which for the first time ever crossed the price of 80 US dollars. But let's stick here to gold. I think silver is a little bit too speculative, in my opinion. Once again, our go-to strategy that I've been talking, well, on almost every session here, nailed it basically again, which basically because the trading strategy behind this or the accumulation strategy for gold behind this is very, very simple. It's really just in a good accelerated trend upwards or downwards. You can do that as well. Buy or continue buying whenever the price touches the 8 weeks moving average. If it goes below the 8 weeks moving average on a closing basis, then there is a good chance it's going to touch the bull market support bands. You can see, especially since August 2025, this gave you a lot of good entries. Last one, we didn't quite touch the 8 weeks moving average. We went close to it, and yeah, it nailed it again. And I always like to talk about this particular strategy or this particular way of looking at the markets, just because it's so simple. Everybody can do that. You just need an 8 weeks moving average. You need the bull market support bands, which are also just sorry, my alarm's triggering here on some crypto pairs. Have a look at this in a moment. So, which is really just a simple 20 weeks simple moving average and a 21 weeks exponential moving average. And if you zoom out here, you can see how well this really works as a zone of support. Of course, eventually, when things flip again to the other side, we see that at the moment of Bitcoin, with Bitcoin, then you have to play it at the other side. So here would be, for example, in Bitcoin, a chance if we go somewhere to 99,000 to 103,000 in that area to take a short trade based on the system. Because I think Bitcoin is in a bear market now. I've read this morning, I don't remember who that was, but somebody influential said he is expecting a new all-time high for Bitcoin end of January. I don't think so. I think we are going lower, and I'm actually preparing to re-enter cryptocurrencies, especially Bitcoin, maybe in October or November of this year. So that's a good question, Scott. And sorry, mate, I haven't been able to reply you on TradingView yet, but I read your message. So Scott is asking, please, can you explain why everyone uses the 8 week average? I know that Richard Butler talks about the 8 weeks average as well. I guess it's, one of the things, I don't actually know if a lot of people use the 8 weeks moving average. I didn't know that Richard Butler is using it as well. But it's like one of those things, maybe because a lot of people are looking at it, it works very well. And I think it stems really from cryptocurrency trading. I noticed this the first time. What was the channel's name again? I forgot. It's such a long time ago already. Must have been like 7 or 8 years ago, where somebody analyzed Bitcoin really like this and basically said, whenever Bitcoin goes into a trending phase, then it's good to to buy Bitcoin even when it touches the 8 weeks moving average. If it closes below the 8 weeks moving average, then there's a good chance it goes down all the way to the bull market support bands. And for Bitcoin, this can be quite wild, as you see, because it likes to pierce through the bull market support bands every now and then as well. But I noticed that this works very well on other assets as well that like to heavily trend. So what are heavy trending assets? Of course, gold. Yeah, gold is kind of like the cryptocurrency of traditional markets because it's so volatile. It works very well, in my opinion, also for indices. So, for example, if you have a look here at the NASDAQ, you can see that it works there very well as well. Every time we touch the bull market support bands, those were great opportunities to re-enter the market. Of course, eventually it will flip markets, so you have to analyze market structure obviously first to kind of get an idea when is there a break of market structure. So for the NASDAQ, that was here the case, and then later on when we entered this hyper bull market here again. But in general, these are good opportunities in trending markets to enter markets. And I would only use that. So I wouldn't use that on currencies, for example, because currencies, sometimes the US dollar is stronger, sometimes the euro is stronger, but it's usually not a pattern that is like true for over decades. Let me put it like this. So you want something that is growing. And I mean, the underlying assumption, especially for the stock market, is that it should be growing. Companies are earning more, and thus index should trend higher over the years, which they do. I mean, the S&P 500 alone, I think, has an average return between 6 and 8%. If you look at a period of 100 years, I don't know how it is for the NASDAQ, must be higher. But it's a general idea. It's, of course, nothing that I would do, if I want to scalp the markets, if I want to do some super short-term FX scalping or stuff like this. But in general, if you are looking like maybe for swing trades or like for your base position, so to say, so a position that you want to hold for eternity or hold for the next 5 to 10 years, I think that is a good idea to look at stuff like this. And NJP Finance mentions here the 200-week moving average. Well, I wouldn't maybe look at 200 weeks. It's more like 200 days. This is a moving average a lot of the institutions look at. That's why it's also important. I honestly, I don't have any data if really fund managers out there are also looking at this 8-week moving average. I think but they might be actually, although the average fund manager is probably not really basing their decisions on techno analysis, in my opinion. All right, good. By the way, I haven't checked in a while how many subscribers we have. Wow, 94,300. So we are still, 5,700 subscribers away from hitting this magic barrier this magic mark of 100,000 subscribers on YouTube. So if you haven't done that already, leave us a like, subscribe to the channel, comment here. The more the merrier. The more people we have joining on these live streams, the more fun it is, of course, as well. So guys, are you in any trades at the moment that you want me to look at? I'm here still in a long trade for gold, which I entered at around 4,451, or was automatically entered, I should say. NASDAQ is a bit of a choppy one, despite trending higher. My system has a bit of difficulties with that at the moment. And then later at 12, we'll see what comes from what positions my automated options trading system is going to take today. I saw somebody mentioning dollar yen, which is like one of the trading pairs, especially LJ and I we always like to talk about because of the carry trade. And last time we discussed, and we'll probably discuss this once he joins us later here again, that we're a bit surprised that it's not been unraveling still. So it's still holding up there. if you want to look at it in a technical way, I think this structure is kind of interesting, because with a little bit of fantasy, you could say that we are leaving this kind of triangle or whatever, or wedge or whatever you want to call it, to the upside. So maybe we are actually continuing, which would be weird, because we still have this gap here. So a lot of the trading action, I have to say, that is going on in dollar yen is based on the interest rate differential between the USA and Japan. Japan historically had a very, very low interest rate environment, around 0%. And when the US interest rates were around 5%, or even around 4%, this was a very good trade, because you could basically borrow yen and buy dollars for that, and you would get more interest for your US dollars than you would have to pay in interest for the yen you borrowed. So this is what is called a carry trade. That's a very common strategy on the FX markets. However, since we are seeing now that, especially on the 2-year, the interest rates for 2-year Japanese bonds, you can see that, or the yield, I should say, is like above 1.1% again. Not long ago, we kind of celebrated that we went above 1. I can very well remember this, because that was on a Monday, if I'm not mistaken, beginning of December. And in comparison to that, you have the 2-year US dollar yield, which, after we reached peak inflation, peak interest rates, has gradually coming down. So it's at 3.5% now, 2% for Japanese. So this carry trade should slowly start unraveling itself. And I'm honestly speaking a little bit surprised we haven't seen more reaction there yet. However, why am I telling you this? Not because I want to explain the carry trade to you, which is interesting, but maybe not so significant for your day trading activities on your Fiverr accounts. The thing here, in my opinion, is that you have to have in the back of your mind that this leads often to a situation that you might have difficulties using technical analysis or using indicators on the trading pair like dollar yen, because a lot of the price action is coming out of the bond markets there. So be a little bit careful. Something I noticed in a lot of my trading systems lately for the past half year, that the performance in dollar yen is lagging behind other currency pairs out there. All right, what else? Euro US at the creation of a double top. Let it run. Nice. Good trade. Silver, that's quite something. Yeah, it's for me, I'm not a big metalhead, so to say, anyway, I don't like gold very much, still have tremendous difficulties trading it also, to be honest with you. Silver is something I haven't looked at in a long time. But for me, this is just insane. If you just look where we were in the beginning of 2025, I'm just going to, with 2025, so around here, around 28, and now we went all the way up to 84. So it's a precious metal. And a performance of 190% within just 1 year. That is insane, in my opinion. So it will eventually come down again. And whether you then decide, am I going to buy this, for example, if it crashes all the way down to the 8 weeks moving average, or do I believe it's still going to trend and I'm going to buy it once it hits the bull market support bands, is of course something that can be discussed. Momentum for sure to the upside at the moment. So should we see price breaking over 80 again, and especially over the former all-time high from end of December, was that around 84 US dollars? Of course, we would go higher, but it's one of those trades, where do you where's your take profit? Where do you place your stop loss for something like this? With insane wicks, also we are seeing. Alone this one up here, this wick that's that's a 2.9% wick. I mean, that's insane. And this is also something that bothers me when trading gold, for example, because the likelihood of being stopped out in a trade where you were actually correct about the direction is very, very high because you have those wicks to the upside and downside. So it's something I do not like to touch. Maybe it's something that comes with age, that you in general get a little bit more conservative when it comes to picking your trades. But I can, of course, understand anybody who's like out there trading silver at the moment, who's out there trading gold at the moment. One thing for sure I wouldn't do here in silver at the moment, I would not look for short trades. Is anybody short in silver or is aiming to short silver? Head and shoulders forming 1 hour in gold. Iona Daro is saying, let's have a look quickly on the 1 hour, you said. Let's go down to the 1 hour. Would be something for our expert out there. Is that a shoulder, head, shoulders here? So are you talking about this kind of structure here for the past hours? Or is that, do I have to zoom out longer? I don't know. Has anybody tested like how well head and shoulders formations can forecast what is coming next? Yeah, exactly. Even that's what I'm thinking as well. It's very, very difficult sometimes to trade gold. I often end up being having a trade into the right direction, but then prematurely get stopped out because there's a wick or things are just from a price action point of view moving very much faster than in, for example, currencies, for that matter, also than in stocks very often. Here we have somebody who is short gold, maybe short AG trader. Maybe you are short gold, long silver, because AG is short for silver, no? Nice. Scott had some good profits on gold shorts yesterday. Okay, why not? Yeah. You have to keep your hands off and just let the trade go with huge stop loss. That's the thing, no. But then also, if you have a huge stop loss, I mean, you probably are talking about a large stop loss distance. Then it's you probably have your take profit also very far, or you need to trade it or something. It's very difficult if you have a trailing stop. There's always a flip side to what you're doing there. If you have a large stop loss, with a long distance. Actually, I should maybe show you that on the chart. Let's switch back to the daily here very quickly. So let's say we have a long position here. Hey, where's my long position? Hello? Did they change something here? Or am I just blind? Here. Oh, God. So let's say we want to enter here. And we want to have a large stop loss. So just for demonstration purposes, let's put the stop loss maybe down to 4,200. I mean, that's like over $200 per ounce of gold. So I would assume, that's a good stop loss. That's a large stop loss. But in order to still, from a statistical point of view, have a profitable trade here, you probably would go with something like a risk-reward ratio of 2, meaning you want to earn double the amount of money that you're risking on the trade. So that would put your take profit in this case already close to 5,000. Now you have to factor something in if you trade this, for example, on a Fivers account, that you are probably going to pay overnight financing, and gold is probably not going to reach your profit target of almost 5,000, overnight. If you're very lucky, it's still going to take maybe a week and a half or 2 weeks. And for that amount of time, you have the swaps like every accumulating, and that can eat up quite a large portion of your profits. We've seen that over and over again. I'm just seeing LJ's in the background as well. Do you want to join us? You ready? Or? One moment. He says, so in a couple of minutes, LJ is going to join us. Now, of course, I have this I'm demonstrating this here on a daily chart, but I think the same probably applies if you go down to something like a 1 hour chart or 15-minute chart. So in my opinion, it's really, really extremely difficult to at least swing trade gold in a way that is sustainable. Meaning, what do I mean by sustainable? By sustainable, I mean, of course, that a series of 1,000 trades that there really is an edge, because we, like as traders, we always like to focus very much on what happened with my last 10 trades, so to say. Of course, it's something totally different, like Scott is mentioning here. When you want to speed scalp, so if you do something like 20 or 50 or 100 trades where you kind of go for 10 points, 10 points is in gold also already a significant move, in my opinion. But then things, of course, are different. However, the challenge of scalping, of course, lies somewhere else. I missed 2 trades on gold with a strategy I'm trying. I've noticed gold just moves in overly exaggerated ways. It wonderfully summarized what I was aiming at getting over. Yeah, it seems sometimes that gold, and especially silver also at the moment, that they are like doing what other trading peers, what stocks, what cryptos are doing, but they are doing it kind of on steroids. So yeah, very, very difficult. And I should actually maybe see if I can integrate gold also into my options strategy. I have to do some research. Maybe there's an edge as well that I have not found yet. Good. Somebody was mentioning GU earlier. Let's have a look at cable. Compare. Yeah. They are a little bit alike. GU and EU. That's why I normally only trade one of each. So I don't like to be in positions with both. At the moment, GU a little bit. What are you? Somebody was asking earlier about GU. Do you have a position there at the moment that you want an opinion on, or just a general thing? Because when it comes to general things, I cannot, honestly speaking, by the looks of it from this chart, like find anything where I say, oh, this is something where we have to enter. LJ, man,
hello.
How are you doing? Good to see you.
Going all right. Yeah, sorry for that, guys. I was getting stuff set up, had to respond to some things before I jumped in. So
no worries at all. Everything good?
Going well.
You look like you are back in your usual streaming spot, and everything worked again.
I am. Because I took the camera up the other day though. For some, you can see how it's picking up the lights.
Yeah,
like really strongly.
It's very bright.
Yeah, and like my partner got me this, which we'll go back to trading in a sec, but it kind of looks like a worm because how I just put it up there, but it's Suzuka circuit.
Oh, Suzuka, nice. Japan, right? One of my favorite ones.
But I mean, that way when you put it like that, it looks like a little worm.
It does. Yeah. I like it. I see you're already eager for the new season to begin.
Yeah, definitely. Yeah, it's going to be. I think it'll be real interesting with the. I mean, all the the car changes, team changes, all that kind of stuff. So, put some new blood, some new life into it, right? So,
it's always like doing the cycle that they have. In the beginning, it's all like very exciting always, and then the teams like. As they progress, like when they're very close, like the last races qualifying, where we saw like it's like 1/10 of a second or something like this if you are in place 10 or on pole position. It's so crazy,
Yeah, and I'm curious to see some of the teams like Ferrari, what they're doing with trying to test different cars to try, and they seem to be hiding some of the tech. Wait to see how some of the others
they have been doing.
And then swap around.
Yeah. But Sir said that this is actually quite normal, and he expects other teams to do that as well, because it was like common practice back in the days.
Yeah, okay. We'll see how it goes. I'm
a little bit sad that the first tests are not public, though.
Yeah. Because I don't know. It seems like if they get it wrong, obviously, you're not going to have the opportunity to change it. You're kind of stuck for the season. So I guess that's their gamble. I don't know if it just seems a weird trade if you look at it that way, as far as you want to hide some things from the other teams. But surely the skill level and everything is that high that I don't know if it's that, But anyway, we'll see how it goes. So interesting season ahead. Be a lot of fun.
2 months still to go without.
I know. Yeah.
And
sad.
So the first race is Australia again, no?
Yeah, I think they've swapped it back after they changed it for a little bit. But yeah, it's back to
where I always have to get up so early.
Hey, no, it's perfect time for me. I mean, half the rest of the season is normally it's either at midnight, or else like 4 to 5 or 6 a.m. So for us over here,
and probably Japan should be good for you as well. Now, Japan, Singapore. Well, okay, Singapore's a night race, so it's already also late for you, man.
Yeah. Japan's a bit better. Yeah, some of those ones, those are ones that are earlier, sort of 11. There's some that are like 10 p.m. So it's still reasonable. But yeah, you go to like the US, and it's it's like okay, except for Vegas, because that is a night race in the US, which is then like 2 p.m.
True. All right. If you don't mind, I would like to get a new coffee very quickly.
Yeah, sure.
And so I'll be back in 2 or 3 minutes. And
easy.
Alrighty,
guys. Let me jump over to my chart. Good morning to everyone, by the way. Happy New Year. I'm back in my regular home now. So, not regular home, regular spot. Got it all back together. What have we looked at so far? I don't know what else Dirk ran over, but I guess if you guys want to throw something up in the meantime, what I was going to start with is the Aussie dollar trend. So I think I mentioned briefly yesterday, and also the back end of last year, this 67 plus, and then ultimately the run towards 70 cents. So what we're actually going to do right now is not going to hide all. We're going to delete. Was delete all drawings? No. God, I'm still so amateur with this. I'll figure it out later. But we're going to clear everything, start fresh. I've taken some screenshots of last year's Picassos, and then go from here. But today we did have Australian building approvals. That was part of this run higher, which came out 15%, which is insane for building approvals for housing. So expected number was about 2%. That's helped us run up further, cracking some of these highs and starting to firmly sit above here. So like I was saying yesterday, my most firm trade so far to start the year is Aussie dollar up towards 70 cents. So we're now starting to track onto that very, very nicely. And we're getting wins of that. Last year, I think Jonathan's very much on some of the Aussie New Zealand dollar trades and some of the other Aussie crosses. But at the moment, definitely Aussie dollar strength is my most confident position right now. So let's have a quick rundown. I've been out of the office per se today, most of the day, doing a couple other things. So I'll be running down where things are with you guys in real time. Gold, I guess, powering on still. We've had a nice little rally back towards these tops, which is good. We were talking about yesterday about that dip, and I was saying I don't think we'll get that dip. We'll just sort of continue consolidating up here and then more strength. So at the moment, that's still looking fairly promising. On the 1 hour, I don't like that we've now drawn back down, and we've gotten capped just by this 10 moving average here. So just like Dirk likes to talk about, as similar the 8 moving average on that longer sort of pullback line as the differentiator. I've used the 10, basically the same thing. That's looking slightly bearish for me right now, I would say. I would prefer, so the level we were talking about yesterday was about that 4,400. So I would prefer to see a dip to here before more buying. But overall, like we've talked about, gold, very strong going into this year once again. Now, the NASDAQ, yesterday we did actually get a bit of a drive higher. So just before I jumped off, I think I was talking with Rich, my preferred position for the NASDAQ would be to see this move lower. And I was talking, if we get any kind of break beyond here, I would see that as a bit of a blow-off top. I was talking about this with Pedro as well. We were both talking about it. So as a potential bull trap, blow-off top, only to see the retracement back down to the prior lows that we made back at the end of November. So it was the 24th, 25th. There you go. 21st, actually, November. So I prefer to see some kind of downside movement, or at least another downdraft. And then if you hold some of these key levels through here, then go for longs. Right now, I wouldn't be trusting breaks from here this soon ahead of some of the forward data that we're going to get coming out after the government shutdown, obviously. And then we've got stuff like, the Fed coming out with the new Fed chair, and then however the committee is going to decide to handle themselves. Infinity, how we doing, mate? Good to see ya. Good to see ya once again. And Louis, as ever. I love you guys. How we doing? How we doing? Unbiased trader, you guys having a little chat here, but this is a good comment. Yeah, fear is part of the process. Just enjoy it as a byproduct and learn to control it instead of it controlling you. Make it your friend instead of your enemy. Life will get easier. I think that's a very good input in general, both in trading and in life, just like you were saying. It's one of those things where you got to learn to work within that that's part of the game. That's sort of what you've signed up for. Learn to understand it, control it, work with it, rather than having it work against you. So, welcome back, Dirk.
Thank you. I just heard you talking about the race for the Fed chairman, and it's like a very close one, no? The odds, like the two Kevins, both around like 40 or 41% at the moment.
Yeah, I would have expected Trump to actually come out and just announce someone by now.
Yeah,
it seemed very much that was going to be the way, but yeah, I guess it's taking some more time for deliberation of certain bits and pieces, I suppose. So
maybe he's too busy with Venezuela at the moment.
Yeah, exactly.
Are you in any trades right
Greenland.
now?
There you go.
Oh, Greenland, yeah.
Yeah. Trades not at the minute. Just Aussie dollar longs at the minute. So that from talking about yesterday, I ended up jumping in here once we had the building permits data come out today. I just took it on a personal account because of news, obviously. So once we had that dip down, spike right back up, jumped in, I think it was about here, 67.30, and then rode this up. I'm now looking for further momentum for this to pick up and back at least towards 67.50 or so, and potentially continue that, which had pretty steady momentum. It's very shallow dips, right? And only this period through here, which, Christmas, obviously, we had a bit of turmoil with the NASDAQ and obviously Venezuela, that kind of stuff. So it's been quite robust the whole way through, which is quite impressive. So I'm liking this, continued momentum up towards that 67 or so right now.
Yeah, talking about the NASDAQ,
69. roughly.
Isn't it in general like an insane start into 2026? We had like the first 3 trading days for stocks, at least, all positive. We have gold and silver going up, and in an environment that is risk on, where like 10 years ago, this probably would have been a massive risk off event.
Yeah, I think silver's definitely an interesting one. I'm not sure if
I'm
I
not touching
have
that,
too
man.
much confidence. Yeah. I don't consider it a precious metal anymore either. It's become much more of a commodity. The past year, 2 years, 3 years, roughly, demand has actually dropped off slightly, but it's picked up massively from, say, pre-COVID, right? And then so it sort of trades a bit more like that, like a general commodity these days rather than a precious metal. So as far as people looking at it as that secondary to gold, as far as the whole decoupling type situation, like obviously we've had the trade stuff going on last year, and then I think the Trump doing the Venezuela thing now really sort of firms it up. Like we got US over here, we got China, and then we got kind of Russia doing some stuff as like a kind of third party hanging around, so yeah, I wouldn't be trusting it. This is something else I found before. So this is total supply, total demand, current mining production, right? So you've got a little bit of supply sitting around. You can see there is a gap, and that peaked, however, back in 2022. It has come off, but there is that gap through there. So
why was there such a high demand? Was that just like for collectors, like for jewelry or something?
Well, a bunch of it has gone into so the other industrials, electronics. So you can see the electrical and electronics, photovoltaics. So a lot of it's like solar power, that kind of stuff. Some of the battery type things. We also did have coin and bar demand through there. So that was also part of Russia-Ukraine type situation. And that's also when gold started kicking off.
True,
it's prop and sort of starting to break into new places. And then you can see photovoltaics obviously have kept going up as well. So that comes into the renewable energy, further push with car batteries, electric cars, all that kind of stuff during that period was sort of really ramping up a bit further, I guess. But dropped off slightly. And then obviously just after COVID, you had a bit of a squeeze from there as well. So because you can see 2020 dip and then that drive higher. That was kind of the case for all commodities right there. So I would be careful though. A lot of this, I would say the push higher seems to be a bit of a squeeze, right? So CME has been continually increasing margins day by day. This doesn't say the percentage, but they're increasing by 23% margin requirements. So there's some people out there with some big positions, and basically after that date, anything that if you couldn't meet those margins, you're instantly liquidated.
Yeah.
So we had that push up, and then that drop right back, and that this seems to be part of it, and they've kept iterating on that. So I would say there's a bit of a squeeze through here. I was also looking at the I've got the chart here. I can show you. I don't have the subscription to this, so I can't rearrange and change the charts, and it's got ads on it. But this is the ProShares Ultra Short Silver on the NYC. So it's a 2x leveraged short silver sort of ETF, basically, right? This thing has collapsed, right? And you can look at the volume spike. So it would be better if I could separate the volume and put it down to the lower chart so you can see it. But you can see everyone's getting liquidated through here. So that seems to be part of the large push higher. So I wouldn't be crazy hot on trying to continue to join this this trade overall. That's a scary one. So just want to say to anyone, don't see it as the same thing as gold. Like we're going to get a continuing run. Yeah, silver's much more.
It's like a leveraged option on gold sometimes.
Yeah, exactly. So kind of, as people like to compare it, or as we've compared it to before, kind of like the Bitcoin versus Ethereum
exactly,
type thing. So, Ethereum can get hit a lot harder. Bitcoin will be down 40%, Ethereum's down 60 or 70.
Yeah.
Right. So, yeah.
Absolutely. So surprisingly, by the way, talking about Bitcoin, we had very high net inflows into the Bitcoin spot ETFs, especially the BlackRock ones yesterday. I was a bit surprised. I thought that by now we would see more net outflows on a daily level because people are getting cold feet. At least the ones, that haven't been through that boom and bust cycle before.
Yeah. There was, I just got to find out the amount.
Well, LJ is looking
Yes.
at this. So
jump over to your chart.
I'm still in a gold trade at the moment, guys, and in a gold long. In an automated system, that is, the FX trades are going to, by the new system, are going to be executed at 12, so in about 40 minutes, if there are any trades today. But as I said before, this is like totally automatic without me intervening. Although I was like very tempted 2 days ago on the first trading day to manually close the trades because it entered like 5 or 6 positions, and then it was up by $75. So I thought, oh wow, that's actually pretty insane, like for just a day. And because it closes them at 4 p.m. my time, so it holds onto them 4 hours. Then it was down by $5. But I'm happy I didn't do that, because that would totally defeat the purpose. And I did enough research. Like, is it better to get out of the trades earlier than that? It's not. So it's an outlier. Yeah.
Yeah, I remember on that Monday we had the dip, and then coming into New York we had euro dollar, Aussie dollar, pound dollar. All they just sort of ran.
It's kind of what happens in
2 hours.
In a lot of pairs, in a lot of, for example, also cryptocurrencies. We always have at the moment Asia is buying, and as soon as New York joins, we go down. We saw that yesterday in Bitcoin. We went all the way up to 94, above 94. And as soon as the US joined the trading session, they were net sellers again.
Yeah, exactly. So the other thing I was going to say about the Bitcoin thing, Venezuela owns 600,000 Bitcoin.
Is that really true?
Yeah.
Was that just a rumor?
The US has basically seized that as well. So I think, like you were saying, part of the Bitcoin thing, I think, they're going to obviously not liquidate it. They're probably not going to quite just take it all, but it'll be sitting there, and it's kind of their coffers now.
Isn't it insane? Like, I mean, this country is sitting on so many natural resources, and it's still such a poor country, If I want to maybe make a mean and bad statement, could be like a good example or bad example. What happens if you let communists run the country,
Yeah, well, since I forget what date it was. Someone can correct me. 2015 or just before. I think it's 2015. Past 10 years, inflation's been 1.3 million%, and in the same time as well, GDP has gone down 75%, which is the most for any country in history, outside of like a war-torn, full-scale war, like your country got defeated, type thing. So those are some pretty insane type numbers. And then obviously stuff like oil, they're like 0.8% of the world supply. You go back to 1980, what was it, like 8-9% or something more, and then even in the 2000s it was quite up there. So it's just off. no, I mean, no one uses the currency. Everyone just uses USD,
Dollars, yeah.
because you have to. So, yeah.
That's we used to have it also when we visited our relatives who live in Indonesia. They also like to always have like euro or US dollars when they save some money, or keep some money at home in cash. Although Indonesian rupiah is, of course, much more stable in comparison to other currencies in this world.
Yeah, definitely. But yeah, no, I don't know. It's a pretty insane situation. I mean, we've spoken about a couple of times this past little bit, but I guess the highlights are definitely that it's probably cemented that decoupling type thing that sort of has been going on for some time. The whole reshoring, decoupling, trade war type stuff it's definitely another, like we're now doing business, like we're playing the game. We've entered the game, is what the US has firmly said. So I don't think the other Latin America, South America countries, Cuba and all this kind of stuff will be quite the same. I don't think they'll end up going in there. It's not the same setup or structure. Even with the Venezuela thing, how quickly and how aggressively it happened. There was clearly some insider stuff.
I mean, it's being said that they had insiders for many decades in every country in South America, and it's not the first time that the CIA is involved into overthrowing the regime of a country.
So I don't think it'll expand to the other countries. Greenland is another question. Like I don't think it'll be the same deal. It might be the US just they just park up over there, right? And just say, we're here, we're operating out of here, and we're kind of setting the terms, and that's how it goes. But it won't be a full takeover thing, obviously.
Did you find what you were looking for just now?
Yeah, that was just the Bitcoin thing from Venezuela. I was just checking what it was, because I was like, is it 600,000?
Yeah, I heard 600,000, but I with a notion still being said like all rumors, So I thought, okay, maybe it's not true. But man, that's quite a stash already. 600K. Black Mamba is asking, did you open a BTC short, Dirk? I have not. I've just opened a BTC long at around this price area here. But it's going to be a very short-lived trade. So I want to, if we go somewhere up to 92,800, if we go up there, that is, of course. And you asked about gold earlier. No, I didn't take this gold trade live on the stream because it was executed this morning. It was at 8:20 and I came online at 10:30, so I couldn't execute it live here. But you see that am I still in this trade? Let me check quick. No, it has been stopped because of a trailing stop logic with a small profit. So at the moment, apart from Bitcoin, long I'm net, which will change in half hour when the new trading system is going to find new positions, if it finds some.
I'm curious to see what it actually does come up with. So.
I'm too.
Cool.
Very curious to, and I still cannot believe, really. It's like I spent yesterday night again. I thought I need to go back into the data. There's something I have done wrong, I've overseen, but there is not. So if it doesn't perform, it's really maybe then two things like trade execution speed, slippage, fees. Although, I have this really very, very strict process already that throughout every step, I always assume the worst. So I apply more slippage than actually is realistic, more fees, a higher spread, and so on and so forth. And I take a haircut of 30%. And if it's still profitable, then okay, there's something. So let's see.
Yeah, that's a good, very healthy amount of variance, I'll say.
Yeah,
definitely. Yeah.
Because the thing is always, when when you test a lot of systems, this is what most people who start into looking into automated trading, into backtesting systems, into finding an edge, they eventually end up with a software, many softwares out there that kind of helps you test like all different configurations for the RSI, for example. And then you backtest like a million different configurations. And of course, you'll end up with something that works then. But it's pure luck, and for that, you need to apply something like the p-value, Bonferroni measure. So if you find something, it needs to, you backtest it like a million things. The thing you find needs to be 1 million times better than an average strategy. And it's I mean, I could go on and on, but I don't want to bore people here. We talking about statistics for the next hour. But
you got to apply rigor
to
it, right? Otherwise, a large enough sample set, you're going to find something that works.
It's like when you buy one lottery ticket and you win, that is quite special. But if you buy 500 tickets and you win something, it's not that special anymore. So what you win needs to be 500 times as special as the single win you had when buying one.
Exactly.
I don't have a stop loss right now for Bitcoin because it's a position I might add to later, because I kind of see that we might be sooner or later trying to get into the area of 95 to 100K again, like one more time. So I would be adding actually to that position later on if it goes down. But let's see. As I said before, a US trading session is likely to be net sellers again for Bitcoin. So we might dip a little bit lower later still.
Unbiased trader, I didn't see this before, sorry. So would I buy short leveraged silver? No. I mean, you can argue that a lot of those contracts have been blown out, but seeing them being blown out and then deciding to jump on the train is probably still not great, because that's making the assumption that there's not more to be blown out, right? So I wouldn't be doing that just yet. I'd wait for a deeper confirmation. Say if you watch some of that and see the volumes are actually, they're still at peak. So if you see them starting to come off as silver potentially keeps going up, that means you're going to have less sensitivity for silver to keep running higher, and it's going to lose part of that momentum that is being driven by the liquidation selling, which is driving the price higher, right? By those margin calls. So once you see that, then you could consider shorts.
Could of course be, one of those trades that pays off very, very decently. I don't know if you put in 1,000 or whatever, and then you tell yourself, I'm not going to look at it for the next year. And then
that's definitely a good way to do it. Get a good bit of clearance, put whatever money you're willing for it to just go to zero, and just see what happens, right?
Yeah, exactly. Like something that doesn't really hurt you, when you lose it. But it's a very, like, the reward can be like massive, of course. You lose 1,000 and you make like 25,000 or something like this. Because I agree with you, sooner or later it will return to median. This cannot be. This is such a speculative bubble that is going on there, detached from reality. For gold, I kind of can still understand why it has been performing like it has been performing for the past 2 years. But for silver, I don't know.
Yeah, I agree. I think gold makes sense. That's why I was making that distinction between the precious metal distinction as well.
I was kind of surprised that silver plays such a role in photovoltaic. Well, how's that pronounced?
Photovoltaic cells.
In those ones, I didn't know that. I thought at an industrial size, it's mostly gold and copper for electronics.
Yeah, mostly. Obviously, it becomes one of those scale type things, I guess, like where gold, becomes, too much. So if there's some a very sensitive operation, something you're trying to build, you'll opt for gold. But otherwise generally silver, I suppose. So, but yeah, and that's the thing with silver. It's always been that awkward position where it's good as a commodity, but it's been too expensive as a commodity. But I guess now it has lagged gold for long enough that differential, I suppose, makes it worth per the input cost versus the loss of total efficiency net makes it, I don't know, the choice.
Yeah. We were earlier when you were still in your Uber, we were discussing here about silver as well. And I said, for me, it's also like a thing. How do you trade this really? If you have like daily candles like this, that goes from 70 all the way to 84, just the wick above here is like almost 3% already, you know? Where do you place your stop loss? Of course, you can like try to factor that in and do something like, oh, I'm going to place my stop loss like 3% away. But then again, your take profit is probably somewhere 6%. In the vicinity of plus 6%. And it's like, how long do you want to be in this trade that this kind of can succeed? And it's the same issue I also have with gold many times, that, you know, I'm on the right side of a trade, but I get stopped out unlucky because the wicks are just too extreme. When it moves, then it always exaggerates so much.
Yeah, exactly. That's the thing. I mean, you know, we had the failure at getting back towards the tops. But right now, I don't like this as like, oh yeah, this is it. We're gonna, you know, almost like the sort of similar to the gold when we had the all-time high sort of came up double top and then came off.
Exactly. Yeah.
Maybe, but I don't know if this is it. Like just the price action.
Back in then, yeah, this one, huh? Looks it.
The sort of personality of that's the wrong word, but how price is acting right now, and obviously given the other backdrop, what is actually propelling this hard, I wouldn't be so sure just yet. I'd probably give it just a little. Yeah, so that's what I'd say. Don't count on it being another massive gold dip. And yeah, proportionately, I mean, yeah, what are we looking back at, like $65-$60, potentially down towards 55? I mean, this is a massive trade if you swing that. But yeah,
if it
I'm
does
not so sure not so sure it's mature yet.
It's also the thing here, if you, I mean, of course, you should always have a stop loss, you know, but especially on assets like this. But I could bet if it starts moving and you get stopped out, so you have this risk discipline, then you have a lot of slippage also on your stop.
Yeah.
It's like what I see, for example, in cryptocurrencies very often. That, you know, you have a stop loss in place and your stop loss gets hit and the order gets executed like $500 worse than the stop loss price is. I fell victim to this in November with many cryptocurrencies, and it sucks like majorly because it's an inherent flaw in the system. I sometimes think the exchanges are also, you know, trying to siphon, especially the crypto exchanges, as much money off you as possible.
Yeah, I was about to say crypto. Yeah. I mean, you know, gold, silver, commodity exchanges have always had their problems and manipulation, collusion type elements from, you know, banks getting together and pushing price around. But there's far more regulation, oversight, and checks and balances than crypto, where, you know.
Yeah, I mean, especially we have the gold futures primarily traded in Chicago, and in a regulated way. I mean, your average crypto exchange, they don't even have an office address on the homepage. And if you ask them, somewhere Seychelles, Mauritius, not to say those are bad places, but of course, it's with the intention to avoid taxation and with the intention to, you know, if they really rip you off, what are you going to do? You cannot do anything in legal ways. So definitely something you want to be careful with.
Yeah, I was just going to say, often you look it up go, Google Maps or something, and it's like an empty apartment
Yeah,
building or
exactly.
half built, still in construction building, or a farmhouse, something like that. Yeah. So, yeah.
But
I will be keeping an eye on the silver trade over time for some kind of short, but probably just not just yet.
so for you, the volume would be the indication that you would like to see, like volume slowing down. That it could be an indication that it's, I'm not going to say collapsing, but going back to more sustainable levels. Let me put it like this again.
Yeah. So the liquidation volume, and then the margin increases from like the CME, that kind of stuff, that levels off, and they've been quiet for a while, and those things come hand in hand. That should alleviate the risk profile of further, margin calls to blow out the price to, ridiculous levels where you go up, what, $6-7 an ounce in 12 hours. Right. So once that's been alleviated, now you can better risk manage, size, profile the trade, and actually get, how much room you actually need, what's reasonable, and then space out your overall targets. But yeah, so it just eliminates that, I don't know, cowboy sort of, I don't know, wild west looming effect. I don't know.
But I mean, I think you got a point there. I wonder how much of these price, if you want to call that price action, of these wild candles are really due to margin calls also. I can imagine with price moves like this, and you, for example, are short calls on silver, it's extremely difficult to hedge that. No, I mean, normally as an institutional options trader, if you sell the call on silver, US dollar, you would do the hedging, the delta hedge immediately. But with price swings like this, you cannot keep up with your delta hedge.
Yeah.
That is,
Yeah, exactly.
So it's like you said, when the margin requirements are larger suddenly, like rise by 30% or even more. So your bank, your exchange is going to approach you, going to tell you, hey, we need more cash in your account, to cover it. Oh, you cannot do that. Well, you're liquidated, forced liquidated. The same principle that we see on our retail trading accounts. Yeah? If you don't have enough margin anymore, the process of closing your positions in an automated way is going to happen until you have enough margin anymore. And we've seen that over and over again on an institutional level, not only institutional level, it's also on retail level, that these liquidation events always come in bunches. Everybody needs to get out at the same time, with the results of like these crazy price swings of 6, 7, 8% to the upside and downside. I can remember a couple of years ago, must have been like 11 years ago, we had something like this in gold back then also. Not at this scale, but it was actually, and I was trying to hedge gold calls for my boss back then. And the market was just dried out. I wasn't able to buy any ounces of gold without accepting like a giant spread of like $20, $50.
Giant spread, yeah. And then the trade is kind of ruined.
Exactly. The trade is ruined, and we ended up really just like saying, go and get what you can get. We'll do the mathematics later in how we're going to translate that to balance our risk in those call options.
Yeah.
And
yeah, exactly.
Our client loved the call options because the implied volatility is always very high. So you get a bunch of cash if you are the writer of the option. Well, on the flip side, in events like this, you're going to lose a lot of money.
Yeah. Yeah, precisely. And like you're saying with the margin increases, like it's pretty rare for that to happen without some kind of adverse event occurring, like like we had in COVID, or some kind of oil shock or something like that, or Russia Ukraine when that kicked off, those sorts of things. For this to just be random. What day was the 29th? I was going to say random Tuesday, but it was a random Monday. There you go. on the 29th, and they're like, okay, margin's going up 23%, guys, on silver,
But I'm kind of happy that they did this, actually. I mean, this is like the system of check and balances, because they have to guarantee that, that when the future contract is expiring, for example, that cash delivery and physical delivery are done. This is what a clearinghouse has to do. And if they cannot do that suddenly anymore, well, then the world would be in trouble probably when it comes to trading.
Yeah, exactly. And I'm sure they were much more onto it this time, even though it being around holiday period after the prior semi troubles. They're like, okay, we need to get on top of this stuff. So, but yeah, silver sometime soon, not just yet. Outside of that, I'm the NASDAQ trade we were talking about yesterday briefly.
What trade was that?
Let me jump over. So if you recall, this when I was talking about this level holding, and I prefer to see a dip down, and then I think when Rich jumped in, oh wait, no, you weren't here yesterday, of course.
No. I watched for like 20 minutes.
Yeah, you were watching.
You and Jonathan were on, but you were not talking about the NASDAQ there.
Oh, okay. Yeah, no. Yeah, I think we started talking about it when Pedro came on. That's right. Yeah, I didn't talk about it with Johnson as well, but later on. Then I was also saying to Rich, I feel like this is sort of any further gains. I feel like we will get this drop lower. I feel like this is a bit of a false break, bit of a bull trap, type situation, and then to see this dip, I can't see any reason for prime confidence to rally back towards the highs, all-time highs at this point in the year at all. There's still too much ahead on the line. So I think, like we had those moves, I think this is something to continue to short. I prefer to see move back down to at least the 23, sort of 820, these lows down here, and then see how we play around there before potentially building a base, or else possibly even dipping below that. So yeah, still trying to formulate this idea around whether we get the gains in this first quarter, second quarter, and then crash out Q3, Q4 or not. So I was looking at, obviously I don't really like the whole seasonals type thing, as we've talked about with Johnson before, but I was looking at some of the stuff. Obviously we're going into midterms this year. It does tend to be quite positive overall. So how much to lean into that with the liquidity type thesis, etc. I think it's going to be very dependent on the forward outlook that we get ultimately with the Fed, right? New Fed chair.
Yeah.
His first comments, where that really, pulls the committee. I think that's really the determinant right now.
I'm honestly, like for this week, a bit surprised that the NASDAQ is lagging so behind because of the what is that called, consumer electronic show that is going on. So we had like keynotes from Jensen Huang from NVIDIA yesterday. I think it was the CEO of AMD giving keynotes and kind of sharing like what is up to come. One of the, who was that from OpenAI? Let me quickly look that up. Greg Brockman, who said this will be the year when you have enterprise agents taking off. So I would have assumed that this drives actually a bit of more positive vibes again into the NASDAQ. So I'm a little bit surprised we're lagging behind. Maybe that's coming later, or maybe it's really on a well-deserved break of going at least sideways for a while. I don't know yet. So what was the trade in NASDAQ you did? Did you short it?
I haven't taken the trade just yet.
Okay.
I'm looking for this. That's basically what I'm looking for through here. This drop down through here. So I was looking at that back in December, mid December. So we seem to be playing that through now. And I was saying any sort of pop through here is probably a bit of a false break, bit of a bull trap potentially. People buying off this break, expecting us to run much higher. So if we get further downside momentum, if I can actually zoom this in, then I'd potentially look to join the shorts, right? But yeah, like some of what you were just saying, I think still early. I'm being touch on, touch off for this week, the first sort of week of trading until not everyone's back at desks, all that kind of thing.
Yeah.
The bit of data to come through, Fed stuff, that kind of thing. I want to see some of that throughput first to have more confidence in jumping into trades heavily. Sort of just like we had this downdraft in euro dollar the other day, only to rally for like 2.5, 3 hours straight, basically no dip after that on Monday, and then we've given some of that back, and now we're trying to find placement. It seems very price action right now in some assets is more confident, others it's very lacking direction. So
yeah, it might also be due to, later on today we have JOLT shop openings, NFPs on Friday. So I agree with you. A lot of people probably want to have a clearer picture first, especially also with that the new person who's going to be the chairman of the Fed is not decided yet by Trump. And so once we get that out of the system, I think there is going to be clearer direction again.
Yeah, exactly.
Plus, people being on holiday, yet that might also be the case.
And particularly something like just before the Christmas, like we've had some of the most net inflows of buying the dip, that kind of stuff, especially for retail in like 10 years for stocks. So per some of the variables going ahead with data, the Fed, that kind of stuff, and then watching some of the sort of now shifts in bond markets, long end, short end, and you've got both in the US, and then not to mention the dollar yen ATPs type thing. There just seems a number of disconnects that I feel slightly uncomfortable with, which have been persisting for a little bit too long. And you're getting stuff like silver blowing out like that. We have had gold have a massive run. That's probably more justified. I'm okay with that one. But there has just been a few tidbits which are a bit abnormal. And then looking at the current volatility is like vol's pretty low as well. I feel like this is not too directional. The Aussie dollar vol though has definitely jumped.
Look at the silver volatility.
66.
Man.
So for reference, guys, that normally sits pretty similar to gold at about 20,
which is already very high. No,
yeah, that's already high. Yeah, but yeah, that is that's insane. I also was the futures for physical delivery 1 year from now, 12 months out. This was before we had that large spike above 74. Was 8% or so below. So it was sort of 66 or something. I haven't rechecked now if that's shifted too heavily, but definitely the forecasting is much lower than where we are. So yeah, it feels very much just like speculative positioning blowout overall. And you can see here 25 delta risk reversals, 1 week 2.2, 0 change, and then you go a month out 7, 9. Like, yeah, it's pretty interesting. So, but yeah, let me just catch up with chat as well.
Yeah, good idea. Oh.
Sorry, no, you go.
Did we click on the same one? Or?
We might have. I'm not sure.
So, Dean Nice Investing is thinking gold higher and Bitcoin potentially higher from here. Gold higher is always a good bet. Unbiased trader just sold his long gold ETF and bought 3 times short silver. Oh my God. So, dude, don't look at that position for the next year. And either you made it then and become insanely rich, or it's going to be a loss.
Yeah, I'll say good luck. Like it could be the right time. Like I was saying with the stuff before. But often there's always that one final little spout that just sort of takes a number of people out and then clears enough that price drops. But yeah, good luck. Let us know the outcome. We'll see.
I kind of feel tempted as well, honestly speaking.
Yeah.
Like, just some gamble money into a leverage short silver ETF.
I think especially if you find kind of the right structure, it definitely is tempting.
Sorry, I have to snort here because the chart is so crazy. My God.
Yeah. I mean, look at it. Like, this is Christmas.
Yeah.
Right? 69, and then somehow we're at 83. Because, it was real funny that, gold was definitely the massive thing for basically all of last year. And then the back end, silver picked up and ended up being the biggest rallying asset for the year. 130% or whatever on the year or something. I think then it was palladium, then platinum, then gold after that.
Platinum also rallied like crazy.
Yeah. But
that's like an asset you usually do not trade, no? Platinum.
Yeah. Yeah, not typically. I just still hate that back early last year. Like, I've still got the drawings on here. Like I was saying, when I was marking up stuff down at $36. And I was looking for the sort of breaks through here and then some kind of dip and then run and got distracted.
But I mean, also, even if you get in at those price levels back then, what is the chance that you've been holding onto it?
Well, yeah, at the time it was trading gold already, which was ripping very nicely. So I was like, silver, whatever. Still something there, but gold's doing great. But from this point, just dude, bonkers, absolutely bonkers. So yeah.
Alrighty. So 2 more minutes, and then let's see if my system gets into any trades today.
I was just gonna jump over to the pound since we haven't run over some of those. We did get that. So I was talking about this yesterday. This downtick to crack through here when I was talking to Pedro. Pretty much that directly through here. We haven't quite picked the whole way up. We've had another dip through here, but I think that will be next point of call for pound dollar. Somewhat similar for euro dollar. Some sort of pickup back through here. However, then we were talking about the Dixie and where dollar yen is as well. Because obviously, like we've talked about dollar yen, don't like the situation, but if you just look at the chart, it kind of looks like we even want to push higher from here, which I hate right now as far as trying to put a framework together. So kind of wondering if at least maybe for a period or for the first month, 2 months, or possibly in the first quarter, we actually do get a strange amount of dollar strength and actually make some kind of run back up towards 99.5 or even 100 on the Dixie. I'm not crash hot given the surrounding pieces on that, but from a technical and purely charting standpoint, that's kind of what I'm seeing. It's conflicting me right now with when the macro, the fundamental, the actual realistic picture ultimately they always diverge, but eventually do have to come back. Gravity pulls things back together, right?
Yeah.
And it's been some time now. So I'm very, very torn by that. Same with the S&P / NASDAQ Q1, Q2 type situation at the minute. I don't know if you've got a view at all,
No.
generally, the dollar or similar deal.
Like I said, for me, I think the picture is going to become clearer again once we have this week done, because I'm really waiting for those job numbers to kind of give an indication. Plus, whichever Kevin is going to be the new Fed chairman, these are the events I'm, from a fundamental perspective at least, kind of waiting for, because I think the market will have a clearer direction then again. What we're seeing at the moment, with the exception maybe of the indices, it's unusual. I mean, it's like no matter what, everything is going up. You can just throw a dart somewhere and you buy wherever it sticks to, and there's a good amount of chance that you are going to earn some money with that. But from a trading perspective, I don't like situations like this. They make me being a bit more cautious, because there is something that I cannot grasp yet, fundamentally flawed at the moment. Wherever that comes from, wherever that stems from. Maybe it's going to evaporate, once those numbers are out this week, once things are a little bit back to normal again. Or, maybe we are bound to see something happening that I cannot point my finger at yet. I mean, for me, it's okay, since I rolled out of most of my stocks, most of my cryptocurrency holdings last year anyway. Yeah. So I would like to see, I'm not saying like a crash event or something like this, but more difficult times, because that would like make me roll slowly into risk on assets then again.
Yeah. No, definitely. I mean, hurt everyone else, but you'll be doing well. So,
Yeah.
Hey, look, it's their fault.
Yeah, but as a trader, you gotta be a little bit selfish, no?
Yeah.
So guys, we have two trades, by the way. We are short dollar yen and short euro yen right now.
Sure.
Two trades opening. Why didn't it open trades on my MetaTrader now? Oh, more trades coming in. Dollar cut, dollar Swissy. Now the MetaTrader also opened the trades. So in total, 5 trades, which will be closed then later, 4 hours in the future. And then we'll see if we earn some money with those or not.
Interesting.
But I'm kind of happy right now that everything works, that execution was automated, because yesterday I got still a bridge error.
Yeah. I'm just looking at some of the charts of that. I like the dollar yen short.
It's like not based at all, of course, on charts,
Yeah, of course. Yeah. That's why I was curious to have a look what's actually going on.
I mean, you could always argue, why it's like short dollar Swissy and long dollar cut.
Yeah.
Exactly. The 2 yen trades, of course, make sense to the same direction. But what goes into the system, of course, doesn't take into account any charting patterns, stuff like this. I try to like get to improve the system further by adding something like price action. So the typical price action patterns, like bullish engulfing patterns or bearish engulfing patterns, and so on and so forth. But to my surprise, they actually hurt the performance.
Yeah, I have done similar. I had to add a very large like fuzziness factor in the system, not trying to make them like too perfect or too structured. Once I did that, and I actually gave it a really wide berth, I was like, okay, we'll see 5%, 10%, 15%. I was like, I just ran it all the way out to 60%. And then it actually worked really nicely.
Oh, nice.
Anything less than that, it was just fail.
What is also interesting is, like, for example, in some of the yen option expiries at the moment, especially dollar yen, you can see that the max pain is very, very far away from where we are currently trading. So there are some massive options that are very, very far out of the money, but still have like billions of notional. So they still and yesterday I sat down that I should factor those out. They're not going to play a rule. And it turns out when I factor them out, the system doesn't work anymore. So even a strike as far away that is like has zero delta and zero gamma probably in the last hours before expiry, but it still plays a role. It still makes price move a couple of pips at least towards max pain. Very interesting.
Yeah, exactly. That's dude. Honestly, it's been one of my favorite. I don't want to call it exactly a trade, but elements to add to multiple trading profiles since forever, and it always provides. So that's good.
It does, yeah. I was surprised because I remember a couple of months ago us talking, or in one of the first streams you asked me that, do you look at something like max pain? And I said, no, I don't, because I could never find that it added to my trading. But now it turns out it's an essential element of a strategy, not the only element. There's a lot going on there also, which I don't want to talk about, obviously, to not give up my edge. But it surprised me that there is a statistical element to that can, let me put it like, say it like, add to your edge, like to not stand in the way of where the money is probably going to flow during the next couple of hours.
Yeah, I think so much more with obviously more and more algo stuff, quant stuff coming into the market. That's very much the game these days, obviously, and that's particularly in stocks, bonds, actual exchange traded assets, much more heavily, a lot less so in FX. But now this stuff is becoming more sophisticated. Stuff like FX, it is becoming more and more prevalent, indeed. So, yeah, really good. Yeah, I'm glad you're onto it now. So,
yeah, let's see. I mean, maybe like 3 months down the road, I'm going to tell you, no, not really.
Never mind.
In reality, it doesn't work.
For a couple of minutes. Yeah.
Let's see.
Yeah,
for sure.
Also, Dubicore, before I saw this, you're being cheeky. You're being cheeky, brother. I got to say, we're pretty quiet right now, which is the Aussie dollar trade I've been in. If I jump over there, go down to a 5-minute chart. So I end up re-entering earlier on through here. I'm looking for, first of all, first point of call up back towards this 50 to 55 type area, and then potentially if we get momentum, beyond that. But yeah, like, what are we doing? It's just sideways for the past several hours now. So it's been 4 hours. We've gone nowhere.
In a sense, it's like a typical day where news comes out, and everybody's waiting once again for New York to give some guidance on direction. Not only in like classical assets. I saw that many times in cryptocurrencies, for example, as well. That I have to wait until New York comes in to really, get some decent volatility and some decent signals. Well, I mean, Bitcoin is not like running like crazy, but sitting a little bit on profits there. But still would like to see it like about $500-600 higher than this to consider closing that trade at least.
Yeah, BTC's interesting. I think I'm still trying to decide, do we push back towards 100K at all? Because that's kind of what I'm looking at through here. So probably, like you're saying, half K higher, dip back towards 90K, and then kind of looking for a push towards 100. After that, if we can't get the momentum, we just sort of capitulate, then right back off. I haven't seen too much real positive, just sentiment.
It's flying under the radar, but that's kind of the headline for this bull market that we've seen in cryptocurrencies, especially Bitcoin. That despite being an asset that everybody can buy now through the spot ETF, institutions that you didn't have this FOMO, like we had in the cycles before that, where my grandma would call me and ask me, what is this Bitcoin and where can I buy it? Not at all. Nobody in my circle of friends that isn't into financial stuff calling me and asking, hey, should I buy Bitcoin or should I sell it now? So very, very weird. But maybe in a sense that's also to be expected from an asset that has reached a stage where it has become very, very mature.
Yeah, and I think there's other portions with I think disposable income, that kind of stuff from sort of retail side has definitely dropped pretty heavily in general from the whole COVID period, stimulus checks, all that kind of stuff, and then going into that big portion of inflation, and then rents and housing going right up. So I think there's also that where there's just not that extra sort of $500,000 that various people can throw in every month or every couple of weeks or 2 months or something. That those kind of just small flows, and people start talking about it, there's more hype, leverage put in. So yeah, it's definitely been lacking. Last year was very much like that, for sure. So Dirk LJ, do you believe in averaging long-term positions if gone against you? So do we mean say hypothetically, like let's use a stock, for example.
I think that's what he means, no? Because he wrote like long-term.
It's either that or the 3x leverage silver positions. Probably don't do that one, but I guess first of all, I would say as far as stuff like if it's like an individual stock, then obviously if you've really drilled down to the fundamental picture, the sector as a whole, other similar what's the word? Not participants, but other similar companies within the sector. There's another word, but anyway, you know what I'm saying. If you drill down to them, everything's sort of stable, and maybe there's been some kind of general dip, or it could be trading or just a sector rotation because something else is really hot. If you've been holding on to that, and so long as the picture is still firm and solid, yeah, definitely, you can definitely still jump into them, potentially even add. Now that comes down to that confidence factor, and obviously the whole thing, especially with stocks, is you want to buy when it's cheap, when it's a total dog, no one wants it, but it has a great story, great fundamentals, great picture, and you can't find anything wrong with it. So long as you can't find some fundamental problem, and the rest of the sector also looks all right, then go for it. Sometimes there can be some weird insider thing that someone knows that there's some, they've committed some fraud thing, and then that kind of comes out 6 months to 12 months later, and then that's why I was getting hit early. And that's why I sort of say, look at the surrounding sector. Normally there's a bit of correlation going through, but if you see one company sort of getting hit a bit adversely for no good reason, sometimes it can be a bit spooky. And then that's when you can also look into the actual share selling of people that work at the company, like the C-suite. Are they trying to, sell off stock holdings or etc., stuff like that? But yeah, what do you think, Doug?
Pretty much the same. I mean, that's the strategy I do as well, because for long-term investments, it's not so much about timing the stock markets, I wouldn't do that. So I have a budget that I want to invest, and I could do that, for example, on a monthly basis to slowly average myself into that same strategy when you DCA Bitcoin, for example. What you just said, I agree very much with that. Of course, the company, for example, needs to be healthy. If you're unsure about this, you can always use ETFs or buy in index, for example, to be a little bit on the safe side there as well. By the end of the day, of course, for a company, there could always be something that goes wrong. They could always be a fraud company. Enron, for example, like a decade or 2 decades actually ago already. We had the same with Wirecard in Germany, where a lot of people, like in the DAX 30 or DAX 40 it is now, and a lot of people invested in that one, and it was a total fraud. There's always this things that can go wrong, but if you look at, for example, companies that have been around for a long time, Coca-Cola, McDonald's, stuff like this, I would slowly average in. I think it's more about like a fundamental look also. Do you believe this year is going to be a little bit more difficult for when it comes to economics? Well, then I would maybe wait until the sentiment gets very bad. Until you read in the newspapers, the economy is doing so worse, stock market is crashing or going down, never invest in stocks anymore, everything is bad. Well, that's the timing when you should invest. And if I'm not so much into analyzing individual companies, to be honest. So if I invest in the stock markets, with few exceptions, very few exceptions, I usually do that through sector ETFs. So like you just said, I look at a general sector where I might have like the opinion that this sector is going to outperform other sectors, and then through the vehicle of an ETF, I will invest into that sector, and I will do so by putting a little bit of money gradually in over a couple of months. Because I mean, there's always a trade-off, of course. Like this, you're never going to be able to time the top or bottom, but let's be realistic. How likely is it that you really are able to perfectly time a bottom? Very unlikely.
Yeah, exactly. Because I think an example would be, I remember when sort of post-COVID or whatever, we had was it Disney? And we had Bob Iger left, and there was some problems there, or whatever. And we had Netflix certainly taking off, and people saying they're going to take their lunch, but it was like down something ridiculous, like 70 to 80% from highs. Now, I don't think Disney is disappearing. Definitely going to come back from there. Maybe the highs might have been a bit overshot, right? Sure, but at those kind of discounts, you'd probably want to layer into that. And if anything, IP library huge. And if you take the argument, Netflix taking over, okay, Netflix buyout of Disney, right? So those kind of plays that make sense, where it's something that is very solid. If in the event of the worst, you're going to have some kind of buyout, great, you're gonna clean up. Those are the kind of really solid things where you can very clearly see something and actually have a high level of confidence, even if you start to come off a bit. But like Dirk was saying, sort of layering into some of those things is a good idea, rather than deciding this is something you want to invest in, full porting the whole thing, and then you get stuck at the top and you don't actually have money to level in as something does come off. Because then you can be stuck waiting for the whole piece to come back, and then sometimes that can be a number of years.
I still remember after 2008, when we also had like this massive crash here in Germany. Sometimes you had like stocks where like this company, like Munich Re, for example, which is an insurance company. They've been around for a very long time. They earn a lot of money every year. Actually, the amount of money they earn every year is getting higher and higher and higher. So it seems to be a very healthy company. And suddenly you could buy the share of a company like this, like for a very low earnings to share ratio, to share price ratio, something like 5 or 6, when in history, usually they trade around 20 to 30. So that is really like, if I see something like this, that would tempt me, of course, to buy an individual stock. Different story, of course, if we are talking about some penny stocks or something like this, where it's more a gamble.
Yeah, definitely. I'm on euro dollar chart. Have I just swapped over there? Yeah, we were just swapping about before when we were talking about the larger dollar complex. So hence the dollar majors, euro dollar, pound dollar, dollar yen, Aussie dollar. So basically, we're saying that right now, I want to see a bit more height in euro dollar and pound dollar overall after we've had these dips. I think once we get up to incremental more highs, so about 136.20 is what I'm looking at on the pound. Euro dollar, once again, back up towards the mid 117s. I think at that point we have a bit more of a decision, kind of neutral decision point. And then we're going to need a further catalyst to actually push beyond that, or else we get another retracement lower. So that's basically what we were talking about with euro and such before. So right now, dollar yen still defying gravity and pushing higher overall. So
Defying gravity. Well
yeah,
put.
yeah.
Yeah, but in general, it's a very slow market, no, today.
Yeah, we had two comments here for pound yen. Do you have some views on pound yen since your system picked up some yen shorts at all, Dirk?
Not really. I mean, pound sterling yen is also one of the currencies that it likes to trade. But I honestly speaking, I don't have a view on it at the moment. For me, ever since we had the Brexit, pound sterling is like has a special flavor. I honestly speaking rarely touch it. So if I want to, typically, it's like you see the same movement in euro dollar when you see in cable. But I always rather trade euro dollar because something about the pounds that I don't like ever since the Brexit.
I think I've never liked it. Yeah, pretty much. I don't think ever. I think since I first started, even 2014, 2013 when I first started trading, I traded for a bit. I liked it. 2014, I started to hate it, and then I would agree. Once Brexit came through, definitely hated it. I've just never quite liked the pound, whether it's pound dollar or any pound cross at all. I just find it acts very peculiar. I don't know.
It does.
So yeah. I would agree. Overall, I mean, pound yen as far as where we are right now intraday, right? So pretty similar structure to dollar yen and euro yen that Dirk's algo basically picked up shorts from. So you can see we had the drive up through here, slight pullback towards these heads, basically roughly a 50% retrace there, chopped around through here through the day and towards the end of New York last night into rollover. Now had a slight slip below, and we're basically coming up, testing roughly this slightly broad range through here. So you could argue shorts. Apologies, guys. You could argue, the shorts do kind of make sense. I'd probably see a little bit more height into here, and then potentially a failure and move back down towards these lows. So about 210.50, I'd probably be looking at pound yen. Now, obviously, through that, you get more momentum up through here. Then I'd see a break up towards the prior highs that we had at about 212.15. But risk reward wise, I'd rather lean on a short through here since we've come below all the moving averages. 200 still rising, 50s come lower, 100s come lower. I wouldn't say this is looking too strong at all right now. And then you've got a similar structure across all the yen crosses at the minute. So there you go.
Yeah, it looks more like a short trade. I agree with you. Yeah. But like you said, this is nothing I would trade because it's pound, it's the pound, British pound. I just don't like it. But if you just ignore for a moment that we are looking at pound sterling against yen and just focus on the chart, I think from a risk reward, point of view, it's the trade that makes more sense, because you can have your stop loss quite tight, probably just slightly above this trend line to the downside exactly, and still have a reasonably good take profit on it that might be reached within the later trading hours of today.
Yeah, so I'd probably look at something like that.
Yeah.
Um,
What is this indicator?
this
Kalman trend levels you have on the
target area. Kalman trend levels, yeah.
Oh, it's from Big Beluga. They make pretty decent stuff.
They do actually, yeah. Definitely. Yeah, I don't know. I quite like it.
I have to look into that one.
Yeah,
haven't seen it yet.
Yeah, risk reward wise, like we're saying though, that'd be about 3.5 right there. And then obviously, if you see this actually break, I mean, this is one of the things with trading. You can always just flip the position. Go long, now run for the highs. You can clearly put the stop back below here, so the mid of this section, just below the prior wicks, around that consolidation point. Take the L through here. You might want to pop it by the bodies here, have a slightly shorter stop, because it should be like, if we start running through there, it's probably confirmed you're out. So you can tighten these up a little bit, something like that. And then you've still got 1.8 to 1. You take a partial loss on that, you'd still have a 1.3, 1.4 or something. Size it right.
Is that something you do?
Size of like either that'll pull and you'll get the, this is now 4 to 1, or somehow this pops above, you get triggering that, then that still comes off. You've either got the 4 to 1, 2.5 to 1, or a 1.3 on the upside, which is either way net profit.
Is that something you do quite frequently, that you flip a position?
Yeah, typically. Often even I won't even run, I won't run a stop. I'll actually just run an inverse position as like a hedge per se.
Yeah.
And once that gets hit, I'll observe price action, make sure it's actually running, and then either decide to scrap the initial trade. So if it's a short in this example, or say potentially the inverse position got hit, but that's a bit of just a blow off or some extra spurt of volatility. Maybe there's a headline or something. Cut that and then let it come back off. So I often like that as well, because then you're put with 2 trades, and it's actually opened up more decisions, but you're already in. And seeing as you do have both sides, sometimes it can help with when people are trying to make an exact decision. You don't have to make an exact decision one side and just be fully, long or fully short. You can actually just, flip it, and it can give you a minute to think as well, because worse, I don't know, hedged out at a relative differential, so it's not much of a loss. And if you just don't like it anymore, scrap the whole thing and okay. Yeah.
Interesting. Very interesting. Richard, welcome, mate.
How are we doing, Rich?
And you're muted, as always. When you come on.
I'm my own worst enemy when it comes to this.
I know that feeling, man. I know that feeling.
I don't want to like pop up and then there's maybe some background noise or something and it disrupts you guys, and so I keep it muted, but then I forget. I forget. Happened to me. I forgot. I'm good. How are you guys, Dirk and LJ? How are you guys?
Not too bad. Not too bad.
Going well. Pretty chill day today. It's still hot as ever over here in Australia, but nothing too much outside of that today. Pretty lax. So.
It's overcast here by us, but it is humid as all hell, mate. It is. I'm sweating.
Yeah.
And it's not even my sweat I'm sweating right now. I'm sweating the world's sweat at the moment. It's so humid, man.
I think after we're done here, I have to put on my skis and go home.
Could be more country home or skiing home.
Skiing home. It's like The world is covered in snow here at the moment. Minus 8 degrees.
Very envious.
Snowed. I'm not. I rather would have heat and humidity than, than dressing up like an onion before going out.
You say that now until you experience an Australian or South African heat wave. And
well, I lived 3 years in Singapore, so I'm used to humidity.
That is fair. Yeah, that is fair.
And I retract my statement.
You don't get like the cracks in the skin, which you get when it's like super cold outside because there's no humidity, so it just gets sucked off you. I don't need to apply like a ton of face cream if I don't want to look like I'm 85 years old already.
That is
all of that you don't have to do. But to be fair, of course, humidity can have a toll on you as well.
Yeah, I'm not the biggest fan of like sleeping in humid weather. A fan has to get going and whatnot. So sleeping in humid weather is very difficult for me.
Yeah,
that's the worst. Yeah.
All right, guys. So I have to make a run to be home for lunch, and I'm going to see you again next Monday. So have fun and take care, everybody. Bye bye.
Have a good one, Dirk.
Cheers.
LJ. Oh, mate. I am stiff as all hell. I went to the gym again this morning. Feeling a lot better than I did yesterday. I've definitely got more energy today. But man, I'm just doing circuit and like some cardio, so jogging and Orbitrek and stuff like that.
Yeah, dude. Yeah. I was going to say, So I went for the run the other day and then yesterday, and also trained 2 days ago. And I don't think I've had DOMs for like 15 years, but today I'm feeling it, like tries, chest, back, because I did a bunch of chin-ups as well, and they're not fun.
Yeah. Every time I lift my arm up, it just feels like my tricep is like pulling into my elbow. Yeah. It's just like, why? Why do you exist? Can you stop existing for a moment? I need to like reach for this thing. But it's not when when my arm is straightened. It's when it's bent and I'm like taking my glasses off or scratching my ear. And every time it's just like, scratch ear. Okay, done. Look at us old men complain.
I know. No, it's just weird for me because obviously, I had that break from training after, every day for the past decade plus. And it's one of those things, like, I didn't realize how in shape I was before until I've now lost that. I was like,
until you're out of shape.
I feel like a limp noodle, It's like, gosh.
I'm doing park runs every Saturday. So it's a 5-kilometer park run. And I got sick in November somewhere. And then I missed a week, and then the very next week we had heavy rains, like torrential rains. So I missed that day as well because I don't want to run through mud, that kind of like thing. Mm-hmm. And then that 2-week gap became a 4-week gap, and then we got closer to Christmas, and then it was just like, I'm gonna suffer when I get back. I'm genuinely gonna suffer, and I mean it's the heat here is intense, and then you go and jog, and it's full blown sunlight, and your calves are burning and, your fingers are burning. Ugh.
Yeah.
So I suffered. When I went.
Yeah. I was going to say, not much trading going on now. We're waiting for ADP.
Yeah.
So ADP is going to be the big one. Obviously, we've had the big drought of data for some time after the government shutdown. We got some of the very rough, somewhat unreliable numbers through the back end of the year. So these initial numbers coming out now, first indications, ADP and then NFP on Friday, going to be very important. So new year, people just turning up to desks. Trading is not going to be so heavy. As we were saying when Dirk was on, I've been in this Aussie dollar trade over here for what, 3.5, almost 4 hours now, and we've just right. So we're not exactly propelling right now. So
No, very, very much so. I was in a very short little NASDAQ sell this morning on our morning stream, and it just double flatted on the 5 minute, and I was just like, okay, I'm okay with this. We'll just cut it short here. But still 0.25%, so that's okay.
Yeah.
But to be in a trade for 3 to 4 hours, I don't know. I'm not very comfortable with holding a trade for 3 to 4 hours. In general, my trades are an hour and 10 minutes to an hour and 40 minutes. But I get shorter ones, like 45 minutes a trade on NAS. But in general, just nothing over 2 hours. So the closer I get to 2 hours, 10 minutes, 2 hours, half an hour afterwards, it's just like, what's going on here? Because, we like momentum. We want that nice move.
Yeah, I think that's a good point in trading as well. People often, size things up. You do risk management, all that kind of jazz, and then have targets. But it's definitely very good to have an actual time target as well. Because really, if you've got a solid trade, it should start to play out within some relative period. Now, obviously, if it's some kind of swing trade or intraday, it might be many hours. But if you got a trade that was meant to play out in the next sort of 10, 15, 30, maybe 40 minutes, and you are holding on to that 2 hours or 3 hours later,
it's going to make me start questioning.
Possibly jump out, because it's not really kicking on. So
yeah, no, I very much agree to that same sentiment. But it's also because the backtested data and all of the trades that I've taken have a similar theme, and if the theme starts changing a little bit, it's like a precursor. Okay, so the theme is changing. What's next to change? Is it now no longer going to move the way that I expected it to move, or is it not going to fulfill the expectancy in the near future? That kind of thing. Do I have to? There's all of these questions that start popping up if one asset or facet of your trading, program starts changing a little bit, and there's data for it. You can see it.
Yeah, exactly. Often it's either consolidation, or sometimes you can actually flip the trade and go, okay, this is not playing through. Potentially this is a sign of weakness. We've got every reason to go higher, as an example. We've got partway, but we're stalled out. Often that can end up in failure, and you can flip the trade and then run back the other way too. So, yeah.
And it can end in disaster, very quickly, especially if you had your mind pretty set on your trade and everything is perfect for it. Everything aligns perfectly. You get in, it starts going in your direction, and you're like, gravy, baby. You go about your business. You come back and you're like, what the hell happened here? 4 hours later, and you're drifting around break even. It's like, what's this? Anyway.
Yeah.
Apart from the Aussie trade, is there anything else that you've either in or have been looking at?
Not at the minute. Just the NASDAQ. Similarly, I've been keeping an eye on this, just like we were talking about yesterday, as for this sort of move up through here, as this being a potential sort of fake out, bit of a bull trap, come back down and then take a deeper drop. So right now that is actually playing out relatively to that, and just sort of need that confirmation that we do actually continue the downside from here, rather than somehow picking up and building off this. So that's sort of the only other trade I'm looking at right now. And then obviously that would also be slightly inverse, however, to the Aussie dollar trade, which is part of the reason I'm also not in it just yet, because typically come towards New York, if S&P or NASDAQ are going to drop heavily, Aussie dollar tends to get pulled with that, and then you'd see this dip much lower. So hence I'm also looking at it as potentially sort of somewhat of a hedge. Then one will get nipped, taken out, and then the other one will run. So then hence net still profit. So that's that's all I'm looking at so far for today. Everything else I'm still a bit dubious or questionable on until we get further data to take.
Yeah, very much so, I think.
Want to start the year out nicely, right? You always want to start on a good run. So
the thing is, sometimes you just don't get it. It's just like the beginning of the year, like you perfectly encompassed how it is people's coming back to the offices now, going back to their desks. People are probably not all that happy to be back at work. Things are
Get me out of here.
out of the gates. Let's just put it like that. Just a little bit slow. And I just think that generally the market is very reliant on news, and we saw that with the government shutdown, that the volatility may have picked up, but the volume really dropped down when the news was kind of like withheld. And now we finally will get back to a period where we're actually getting news on time as expected. So slow, but I think we're going to start seeing a very nice ramp up, at least in trading volume. So that should be pretty good, I think.
Yeah, indeed, agreed. And then the Fed decision as well for the new Fed chair, right? We've got to see that come through. So these are a number of very big pieces. So no surprise, guys, if we got some sort of steady trading in the first week and a half, 2 weeks maybe of the year. But once you do get that initial tone, at least for January, you often tend to continue that. Feb becomes that decision point, sometimes pulls back, and then if it's confirmed, you run through the first quarter, and that's the direction for the year. So I'd rather sort of wait and get the confirmation of that and try and run it through Q1 overall. So
I'm not as what's the word? I'm not as impacted by the bias. I just trade what I see. So if it starts pulling back, I'll start doing shorts. If it starts picking up, I'll start buying. So not all that impacted by it, but I do understand the feeling of people being like a little bit. Let's just put caution to the wind a little bit. Let's just give it a bit of time. There's a lot of changes. There's a lot of geopolitical unsteadiness at the moment. More so now with the Venezuelan American debacle. It's just there's so much happening, and then at the same time you have a new Fed chair that's going to be announced, and out of the US at least, for US pairs, US assets and whatnot, you're kind of like, I'm gonna wait. I'm just gonna wait.
Yeah.
So I got
I was talking with Dirk. There's a lot of conflicting sort of moving parts right now that I'm a bit skeptical on. So, but yeah, go on. Sorry.
Oh no, I just wanted to say that yesterday I had a losing trade on my stream account, but then I made up for it this morning by taking back what I lost yesterday. And last night I got a very, very good buy in New York, somewhere over here, but it was not entirely on the close of the candle, but I got a 1 to 1.5, aiming for the top of the London session, basically, in when New York is open as well. So was very happy with this one. Got a 1 to 1.5. Not happy with the sizing though. I wanted to go a little bit larger, like 0.5% or so. It ended up going 0.25%, but I was happy with the result of that trade. And then this morning, I got a little trade over here. Wasn't the biggest of trades, but it was still a 0.25%. So it was a 1 to 1. Not a 1 to 1 that I would normally go. I think it was $30 to $30 or something like that, somewhere around here, something like that. And it just kind of like, I don't know, it just died off. So overall, not bad. But I am out now. I'm gonna wait for the ADP news, and then after that it's the JOLTS opening. Probably be making dinner and all of that kind of like stuff. So I'm pretty much done trading for today, bar the perfect setup. If the perfect setup comes, then I'm willing to get in on a trade again. But other than that, I'm more than happy to sit on my hands. Just wait.
Yeah, totally fair. Sniper VWAP. Yeah, am in that Aussie dollar. Long have been sat in that now for like 3 hours or something. What time was it? I'm gonna check my time versus almost 3 hours now. Just coming on 3 hours. So 2.5 hours. So yeah, if it doesn't sort of kick on before ADP, then potentially I'll dip out on it and then reassess after ADP clears. We get New York Open, see what's happening then. So,
I mean, it's doing pretty much the exact same thing it did yesterday.
Yeah, which is what I was looking for. Yeah, we've had the very shallow sort of dips, and there's been a consistent willingness to buy up and continue that momentum. So
I think the only weirdness is like during Tokyo, this large gap down in the beginning. This is on the hourly. You saw a little bit of it over here. That's the wrong thing. What?
Yeah, Tokyo today was the data for building approvals, which actually came out way higher. It was expected 2%. We got like 15%. See if we can alleviate some of those housing pressures there. Build some more houses.
Get people into homes, mate. Like get them into a home.
Yeah.
Home for frail care. But I do like your AUD USD buy. I do like it. Even though we had a little bit deeper of an open price basically during the news event, it had no follow through to push it lower.
Yeah.
So that's good. And then we've effectively come back now to almost test it, and we're doing the same kind of like slowed downward momentum. It would be lovely to see it kind of just try to pull up now with the news. Hopefully the news is in favor of your trade, and then just kind of like continue. That would be great.
Yeah, exactly.
It looks good. I like it.
And thank you, Sniper. Thank you. And yeah, like I was saying just before as well, Sniper. So basically, the other portion I'm looking at is what was that? The other portion I'm looking at is NASDAQ shorts, which obviously, if NASDAQ does come off, then Aussie dollar is likely to come off with it. Obviously, risk sensitive currency, high beta currency tends to get pulled down. So that trade would then cover any loss on the Aussie dollar and then pick up some. So I've got basically both sides sort of leveled out through there. Rich, by the way, though,
yes.
Do you have someone coming to join you? Only because I do have to dip to the shops before they close in 13 minutes. If not, I can come back.
You can dip out. Dude, you can dip out. It's fine. I don't know. I don't know if anybody is scheduled. I know that Aaron was yesterday and the day before he was scheduled to be with me. Yeah. But I have no idea for today. I'm more than happy to just...
I don't want to leave you alone. That's all. So,
fly solo.
Feel
I mean, you can run to the shops quickly and, I don't know, do your shopping, and then maybe there's half an hour left and then you can join again if you so want to. But don't feel pressured to do that, mate.
Okay. All right. Because, I will have to run down, get that done, and then do one or two things, and then I could jump back if you're still alone. So if that's okay.
Yeah, no, dude.
Sorry, man.
You do you, boo. You do you, boo.
Right.
If I'm alone, it's okay. It's just, I can go solo. I don't have controls, but Remy is in the background, so Remy can be my co-pilot.
Yeah.
So all good with that.
Okay, cool. All right, guys. I'll see you soon, possibly. Be right back. I'll leave you in good old Rich's hands. So
awesome.
That sounded.
Sounded good.
Anyway, I'll see you guys soon. Ciao.
Cheers, LJ. All right, Hoozles, what is up, everybody? Weed coin, try not to spam. It's A, very annoying, and at B, it's technically not allowed. We would like to keep the chat open to everybody to have an opportunity to kind of, have their say, ask their question. So try not to spam, please. We do appreciate if you didn't spam. Let me have a little look through the chat. Z Milcom, hi Richard and LJ, what do you think about Euro GBP? So Euro GBP, I will have a look at for you right now. This is on the hourly chart, and boy, does that not look good. That does not look good. That is incredibly flat. We're sitting very much in a lot of consolidation at the moment. This is on the hourly though, so let's have a look at the daily. On the daily, we've had a massive sell-off. We broke past previous low swing points, just kind of like wicked below, not really all that strong. We do have a order block area over here, which was just tapped into, but we're not getting any real reaction off of it like we did over here. So as it stands right now, this is still very on the higher time frame, mind you. This is still very bearish, even though if you go even higher on the time frames, like with the weekly and the monthly and whatnot, you will most probably see this upward trend that we have here. But overall, very nice big sell-off that happened over here. It looked pretty good, but no follow-through. So we're probably going to wait for some sort of little retracement and then a potential downward push, but I'm not sure. We're not really getting the follow-through at the moment. That's on the daily. On the 4-hourly, we're very much sideways. This is just absolute sideways price action. So I would avoid trying to trade the Euro GBP just yet, unless you have some sort of consolidative strategy. But other than that, I would definitely either wait for a breakout and a retest probably. But other than that, it's a bit flat at the moment. But it doesn't look bad prior to. I mean, we do have very nice areas to come and retest if we do come back again into the higher end of the range. Not particularly strong though. Not a particularly strong area. This would be more of a test to see whether or not the bears have conviction over here if price were to find its way back up to here. So obviously you would then expect either a similar or the same kind of reaction where it consolidates a little bit and then just carries on selling off. But other than that, I would wait. EG, very flat on from 4 hour all the way down. Very flat. And it's been flat for a few days as well. Well, not a few days, but since the whole of yesterday. And what is the full length of this range? That is 19 pips, but that's just on the extremes. That's just on the wicks. If we just look at the bodies and we look where the majority of the trading happened, this should be significantly less. This is 8 pips. So for 2 days, for today and yesterday, we're kind of stuck in this 8 pip range. So we're definitely waiting for some sort of breakout of sorts. All right. Henry's saying in a UJ long, looking for 15672. So you're looking for this upper box up over here. Let's have a look. See. So 15665, 15674. So you probably want something like that. You're aiming for that, and you were in at 156559. 156559. So you were on the tippy top here, right there. Aiming for 156721. Close enough. There we go. And then your stop loss is at 156428. Oh, exactly. Like, okay, well, not exactly, just 2 more. So that's where you're sitting at the moment. All right, so you probably got in somewhere over here. low below this recent swing point and then looking to go into this area over here. I marked this up this morning based on yesterday's high point and yesterday's low point on UJ. We're still struggling a little bit in this area, but I do like that. However, I'm not fancying. Actually, no, this actually does look kind of good. Yeah, that's a base area. So that this is basically. So there's your low, there's your new high, which is equivalent to a previous high. So it's a double top. You do have a higher low, but it's the equal tops that's a little bit annoying. So you're basically getting a ascending wedge, much like this. So there is a potential for it to. It can shoot up, but it will most probably do the inverse and probably move a little bit lower. What does the MACD show? The MACD is showing a little bit of upward momentum. What is the EMAs showing? We're at the EMA, so this can go either way. This can definitely go either way. But good luck on that one, Henry. I hope your trade goes in your favor. SK Forever or Forex Trader, tell me about gold today. Gold was quite interesting this morning. So gold has been bearish the whole of today. We created the high all the way up over here. We were very far away from a base area that I had marked up previously from about the 29th of December. We didn't quite reach it, which is fine. But from there on, we started to print lower highs, lower lows, lower highs, lower lows, and then eventually we came to a point where we got a double low. Well, not a double low in its entirety, but like you can see. If I just move this, it's very close. It was very close to a double low over here. So we just barely wicked lower. It is in line with a order block on the left-hand side where price reacted. We were going upwards and then or bullishly, and then eventually we just tapped into another base area and then reacted strongly out of it. So we reacted upon that point as well, but we did not really create much of a new bullish movement. This was a break area because we started to sweep these recent lower highs, and in so created a higher high in relation to this previous point, but no follow through whatsoever over here. We wicked into the very last area where price attempted to break this downward trend. Just failed. This is a 50 EMA as well, so we kind of respected the 50 EMA, and I think the 100 EMA as well. No, not really. It's only the 50 EMA that got respected here. So from there on, we kind of had this little bit of a slowed descent, very, very, very slowed. So slowly making a little bit lower highs, lower lows, lower highs, and now we're starting to push lower yet again, which kind of makes sense in the idea that we were pretty much in a downtrend for the whole of today, and then when we did have an opportunity to try and break this downtrend, it fell short. It really fell short. So when it comes to areas to test, first and foremost, we need to break below this recent support area. We also have a base area just underneath that can also be tested. And then we have all the way down here, we have a gap, which was gapped on Monday the 5th, but there is a base just around about that gap as well. And we have another area where when price retraced towards, it reacted nice and strongly, and it's basically this area over here of consolidation. So if you pulled it all the way back, you would see that that is a very nice demand slash support zone, a resistance slash support zone. So reached into it, reacted off of it, reached into it, reacted off of it, broke through it, retested, and then started pushing up above it. So I do like this area to be tested, basically. That's, again, assuming we do break through Tokyo low as well as this support area as well. Bar that, if that fails and we start pushing up, then I do have two zones above, which is the all-time high, which is around 5550, and then a base area that was not quite tested at 446 and then 4519. That's what I'm seeing in gold at the moment. It's a little bit bearish, but also technically still a little bit sideways. It's very slowed, it's waiting for some reaction. Maybe the news will move it, but I think there is a probability for us to potentially try and go lower, just based on the fact that we've broken this upward trend. This channel that we've broken, we've retested, and it looks as though we might want to start pushing lower. Abish, about two indicators. Can you tell as first two indicator? Okay, that was probably for LJ. That was LJ's indicator. So he, I think it was an EMAs. It was multiple EMAs, a Coleman. He's got standard deviation channels as well. But when he comes back, then we'll just remember that one. Unbiased trader Richard, do you have set periods of trading? For example, if position hits target / stop during that period, okay, otherwise close manually or set time. No. So generally what I have is I just don't hold trades overnight. That's all I don't do. So it's either stop loss or take profit. And if I'm still in a trade and it's getting like later in the evening, then I would close a trade. The only thing is I just don't hold it overnight. Patel Neil, oil. I did not have oil up, but I can just quickly put it up. I don't generally check oil. But we can have a very quick little look at oil. LJ did say yesterday that he expected some sort of a bit of a downward push. This is on the hourly. We have semi-bottomed out over here. Low volatility around 56.54 to 56.01. But this was quite the sell-off that we've had from up above here. I think overall that's not horrible. We have come into this area over here, so quite a bit of consolidation that we had here. That's basically where we wicked into it and is reacting off of it. There is, I don't know if there is a really strong chance to buy up, because technically we have this whole section here, which seems to be reacting at a very strong resistance point. Yeah. Came into it, didn't really react off of it, finally tried to push above it, failed, pushed lower, didn't create a new low in regards to this area down here, kind of chopped around in between, eventually came and tested it, started pushing off lower. So this area up over here is a very strong resistance point, I would say. If we were to come back to it, then I would assume that we're going to have a similar reaction. So we would either have this slowed momentum over here, or we're going to have some stronger reactions. I would probably not hold longs above this area. Probably wait for a bit of a pullback and then sell, probably. But that's just based on what I'm seeing over here. Much stronger area above here. This is the first test that we're having over here based on this area on the left. And there's still a little bit of reaction below that as well. So if price were to start pushing lower, you can always go and test this bottom portions down here. So for oil, I would say a little bit more selling pressure, even though we are kind of stuck between these 2 points at the moment. Bit of a pullback, I would say. Let's look at the fib. So a 50% fill would be over here. That would be your 50% fill. Potentially could get back to that point. Or alternatively, you can literally go just to the full... it's also the 50% fill is the whole movement as well. It's the whole consolidation area. Well, the whole range. So wait for it to probably break above that midpoint, show either a slowing of momentum or show a absolute change in character, and then decide to get into it. LJ is on a long position. AU, yes, he is a long position on that one, but it makes sense. But it's going to, like you said, we're probably going to wait for news to really play out with the ADP news that's coming out. What's the time now? It's 2 o'clock my time, and it's coming out at 3:15, I think. Yeah, it's 3:15. So it's an hour. It's an hour and 10 minutes or so. Then we'll have ADP news. So it's flat right now. So probably not going to move much before ADP. Probably not. Gold we've already done. This 10 is a weight I have an idea for the next. No idea what that's all about. Judson, nothing is happening. Gold has been dumping. I mean, yes, it's trying to. If you're trading on the 1 minute, I don't even check the 1 minute, do I? Let's have a look on the 1 minute. On the 1 minute, yes. On the 1 minute, it looks good for sells. But like I've already explained, it's because when we had this opportunity to try and break this downward trend, there was no follow through. So we just this is just technically a little bit of a retracement, and now it seems as though we're continuing the sell off on gold. We all in gold shorts. Well, it makes sense to be in a gold short. Ajit saying, if my swing trade hit TP or stop loss during news, will it be considered in-rule break or not? No, it will not be considered an in-rule break. So the rule stipulates this. You're not allowed to open a new trade 2 minutes before and 2 minutes after a red folder news. So red folder news is based on Forex Factory's red folder news. So it also has to be the pair associated with the news. So there's dollar news coming out in an hour or so. Red folder news. All of the US pairs, you're not allowed to open up a new trade. So in this case, it's 3:15. So it's 15:15. You're not allowed to open up a new trade at between 15:13 and 15:17. So it's a 4-minute window in which you're not allowed to open up a new trade. But existing trades, trades that have been in the running, a swing trade or something, if they were to hit your stop loss or if they were to hit your take profit, it's all good, no problem. You don't have to worry about that whatsoever. It's purely for the opening up of new trades. And the thing is, it's more the ideal that people are trying to take advantage of the sudden volatility of a news event. So they try and catch it. But people fail more often than not. So all you're doing is you're just creating more losses for the company and then for yourself as well. So they're just curbing that idea. But it's just 4 minutes. So it's just to allow for that initial spread movements, that sudden volatility to kind of just die down, and then you can carry on with your trading. SJ Forex asking about GU. So GU has been, I'm going to go on to the 4 hourly. GU has tried to take all-time highs. Oh, not all-time highs, what am I talking about? Has tried taking new highs over here, which it did, but the pullback itself there's still quite a bit in this one. I think if we just look at the fib, we are basically at the 50% fill of this full move of what was this, Monday, or full move of Monday. So there is still a potential for us to try and push higher from here. However, this opportunity that we had today, or at least yesterday, to try and push up, it didn't really push up all that much. So we need to go and find an area from which it can push up. I had this area initially marked up, but I did move it down there. So the way that I see it is, this was the area where price failed to break lower, and this movement down here led to a new high. So you have the last attempt to push price lower, price started pushing bullishly. Bearish attempt failed spectacularly, and then started pushing off from there as well. So this is an area of interest for me. We want to see how price is going to react in this whole zone, because this is basically where the last attempts were to try and push GU down. Where we are currently, we have a lot of consolidation on the left hand side, which is kind of where we are right now. We've broken above, we've retested, and we're kind of just sitting here. I think that there is a little bit more in it to try and push lower again. I'm not a firm believer in the pound's strength, to be dead honest with you. So to me, it does look like there is a potential to try and push lower. I don't think that there was much in this whatsoever, but only time will tell. And it's going to base on whether or not we can get down to this area over here, this base area of mine, to try and break through. If it breaks through, then we can go and look for areas to test. Below that, I mean, it is overall bullish still on the higher time frame. What is this? Since November, we're still very bullish on the higher time frames. But that doesn't mean that it's going to continue like that. We're still stuck in this range, though. Yeah, this really needs to get broken, closed, retested. So I would say if it were to push down from here, it needs to break down here, retest, and then continue lower. On the higher time frame, it's a little bit slowed upward ascent. We did get a breakthrough above these highs, but no follow through. Bit of a pullback. We'll see whether or not there's anything in it to still go up. However, yeah, I don't think there's much in it at the moment. I think everybody's just waiting for news, mate. Louis saying, we'll look after him, LJ. Well, thanks, Louis. Really appreciate that. I just want to be that guy. Morning. Well, it's morning somewhere. Good morning. It's afternoon here by us. Gold is unusually calm. Well, it was until it looked like it wanted to move a bit, but that was 23 minutes ago. DJ, greetings. Richard B. Hope you're well. I am swell, mate. I am tired because I started to gym again on Monday. New year, new you, that kind of like thing. So I'm tired. My body is stiff. I'm sore all over, but that is the price that we pay to become the people we want to be. Crypto Knight, Rich, morning, mates. About the NQ trade you took yesterday, why didn't you let it run and chase it? I mean, I was in the same trade and I got some good returns, but had to be patient for a bit. So, I am very much a set and forget trader. Very much so. I look for a specific entry model, and then I'm looking only for between $40 of movement to $80 of movement on NASDAQ. That's what I'm looking for, because that's what I've backtested. It's the thing I'm the most comfortable with. I can close a trade based on intuition, and I can close a trade based on what I'm seeing on the candles working out. But I found that with my backtesting and my statistical data that I have available to me, the set and forgets just work the best for me. Specifically, how I've been trading. I also have a best of 3 is well, that used to be my nickname. Best of 3 is me. A best of 3 strategy where I will only trade 2 trades maximum a day, or 3 trades maximum a day, of which I'm trying to get the best of 3. So I'm either trying to get 2 wins or 2 losses, or 2 wins and a loss, or 2 losses and a win, that kind of like thing. But like the best outcome of 3 outcomes. So I'd already taken a singular trade on my stream account down here, and that is also a set and forget one, and that one unfortunately ended up being a bit of a loss. But that coupled with my set and forget just nets me the best results. I do like the idea of holding it because there is quite a bit more in it. So if from where I'd entered, there was at least twice that. So this could have been a 4R trade or a 3R trade actually, but my data is on 1 to 2s and 1 to 1s and 1 to 1.5s. So I thought that this was a reasonable area. It aligned with what I wanted. Yeah, that's it. But I do like the idea of having to hold it, but I just don't have enough data on that. And I tend to want to have data and then base a strategy around the data that I have. Or at least I have an idea and then I try and build a strategy around it, then gather some data to see whether or not it works. So yeah, but I probably, even if I did hold this one a little bit longer, I probably would have closed it at roughly the same point, because of the fact that we started slowing down quite a bit in this area already. So I probably would have closed it regardless. But that's just me. Okay, let's have a look. I just passed phase 1 bootcamp. What now? Now it's phase 2, mate. If you've passed phase 1, bootcamp is a 3-phase account. So you need to make 6% on phase 1, 6% on phase 2, and then 6% on phase 3. So usually how it works is once you've passed one of the phases, what will happen, you will receive an email. It's usually instantly. It's within a few hours at most. You will get your new credentials, and you can then just go and input your new credentials on your terminal, and then you can carry on trading again. So that's what you do. You just wait for, or just wait for the credentials, and then try and pass phase 2. Fiverr, the Fiverr's funding and beyond not giving payouts, don't trust. Well, I know of many people that can dispute that claim, my friend. So yeah, I'm just going to ignore you. Hello from Syria. Hello. Okay, so that is, we've already answered that one. I was looking for a retrace as well, 50% of Monday's range. That is a good idea. So generally, if you're still within a trade and in a trend, let's rather say, and it does pull back a little bit, you kind of like looking for that like fib retracement golden zones, because they tend to just play out. So even if it is a psychological thing, it still has a tendency to kind of like work out over the long run. So grid code, what confirmation pattern do you normally use to enter the market? So for me, it's a very, very simple confirmation. So I will use yesterday as an example. So I look for what I call breakpoints. It's very simple. Technically, the whole of London session, this blue box is London, this orange box is New York. Technically, all I'm looking for is I'm looking for a trend of some sort to be established. And then I'm looking for the points where either the trend confirms continuation or confirms that it's changing. So generally, this yesterday morning, ending out of Tokyo, coming into London, we had this very much strong sell-off from the highs of the day at that point, which was over here. The highs of the day was there. And we took up everything that Tokyo had to offer. All of the moves of Tokyo was completely wiped out. But there was no follow through. What happened was we eventually entered into a little bit of a upward ascending channel. Slow at first, but still an upward ascending channel, until we eventually took up all of this move in essence. So the whole move was taken up. Anyway, so what I then look for is, for New York specifically, is I'm either looking for a continuation of this specific trend. I either want this to continue, or I want to see the opposite. I want to see that initial movements take place. So generally for me, what I look for is, it's incredibly simple in my opinion. I look for a high, that was at that time the most recent high. I'm looking for a low to be established. There's the low. So high point, low point. And remember, this is still in a channel. It's still in a trending direction. I'm looking for a high, I'm looking for a low, and then I'm looking for a point where one of the two gets taken. Either the high needs to get taken or the low needs to get taken. In this case, before we even got to test the low, the high was taken up over here, this recent high. Okay, so this then creates a new, there we go. This creates then a higher high. As simple as that. And then what I'm looking for is, I'm looking for what I call bases. So this to me signifies that we are most probably trying to push higher, because that is what NAS does. It kind of conforms to a singular movement. You have small retracements, but if it chooses a direction, it tends to stay in that direction. It's just the volatility and the volume of that direction that changes. And overall, NAS has been, or the US tech has been quite bullish for the longest time. And anyway, so this candle over here, this bullish candle right here, before it closes, it tried to create a new low. So this becomes a higher low then. So what I can see is that we've got continuation of this initiated trend during the London session. So all I'm waiting for is, I'm waiting for what I call bases. And a base is after I've had a change, or at least a continuation of a trend. In this case, it's a continuation, meaning higher highs, higher lows for buys. I look for an area where the sellers try to stop this initiation of this upward move. And it is the last attempt by the sellers to try and break this new initiation. Because you can almost imagine, like, price is trying to push up, it creates a new high, and then the sellers are like, oh yeah, this is the perfect opportunity to try and push the price down. And generally, I always talk about an arm wrestle, a back and forth. Bulls are pushing, bears are pushing, bulls are pushing, and eventually one of them is going to lose. And this is that opportunity. This is that place where eventually they lost. How did they lose? You have a very strong engulfing candle that engulfs the body, but the whole movement engulfs the bottom portion, basically. It's not entirely engulfing candle, but you kind of like get the gist. This candle shows a lot more intention than this candle. This candle had a large wick above, a large wick below, and then the body of the candle itself was quite small. So we ended very close to where we started. But this candle had a large wick below, but a strong body above and very little wick above. So this candle basically signifies, hey, listen, we're going up, mate. Like we're going to push up. And then what do you have? You have a volumetric movement pushing price higher. So what do I look for then? I'm either in this trade at that point. You have to be very quick. So you have to know exactly what you're looking for. And then I would look for a 1 to 2 as an example, or a 1 to 1.5 for New York specifically. Alternatively, I missed this. I wasn't at the market here. I was busy cooking. I will then wait for a retest. I want to see this base area of mine retested. And in this case, we did get the retest and an attempt to start pushing higher. So I'm a little cautious at first because I want to see if this is just a new pullback. Because what we have now is we've got a high up here, but price started pushing lower, creating a new base as well. So this is a bearish base and this is a bullish base. In this case, attempted to push lower, tried to come back up, but when we had another opportunity to try and push price lower, it failed. We didn't even come close. So basically we are creating yet again a new low. That's how I like looking at it. Like I break it up every single time. So there's the high, this is the low. My apologies, keep misclicking. This is the low, this is the high of this section. When price tries to push lower, which remember this is the initiation. So this initiation here was the bullish initiation. So we want to see it try and, have higher highs instead of just higher lows. We want to see it want to push higher. Here, we've initiated a sell. So I want to see whether or not the sells can push lower. And it failed. It basically created a higher low over here. And then all I'm looking for is what I call a rally-based rally. So in this case, it is a 5. It's between a 5 and a 6 candle pattern. And it's basically this. After you fail to create either a new high or a new low in this case, this was just a higher low, so it's not a new low. A new low would have pushed lower. And we've had a reaction of an established area, and an established area for me are bases, session highs, session lows. And then all I'm looking for is I'm looking for 5 to 6 candles. In this case, it's 1, 2, 3 bullish candles, 1 bearish candle, so it's a rally, 3 rallies, 1 base, which is trying to push the price lower, and then another rally. And all I do is I just enter on the close of that candle. In this case, was a little bit late, but still same point. And then I will either, depending on the reactions that we had, like at recent high points like this, I will go for a 1 to 1.5 RR or a 1 to 2. And that's the exact thing that I look for. The exact thing. I have other things that I also trade and how I trade them, but this is in general just a very quick idea of what it is that I'm looking for. Simple. Very, very, very simple. Only 14 more likes until we hit 150. Yes, please. Can we hit 150? Would you do it for me? Would you do it for the fivers? What time frame am I using on gold? I focus almost entirely on the 5 and the 15, but that is because I am a intraday trader, so I don't hold trades overnight. I generally start my analysis from the 4 hourly and the 1 hourly, and that's just kind of to see if there's any specific base areas that I need to take in consideration. This is an hourly base, but there was a 4 hourly base basically that was reacted off of. So that's where I find a lot of my bases is on the 4 hour and the hourly, and then I go down to the 15 minutes to get a general view of the structure during the day, and then I execute on the 5 minute. And I will do that for everything. For gold, any of the euro pair, dollar pairs, NASDAQ, that's how I trade. Okay, so LJ already went through AUD, USD. Can you tell us about your risk management? Sure. So generally, when it comes to risk management, I stick to one of two risk profiles. My higher risk profile is 0.5% per trade. That's it. I look for 1-to-1s during London session. I look for 1 to 1.5s to 1 to 2s during New York session. So on New York, I will generally put 0.5% because there's a little bit more volume, there's a little bit more volatility, and I'm not in a trade for all that long. It's fast. London is a little slower, so London I will take 0.25%, and sometimes in London you can have unexpected movements with NAS specifically. So 0.25%, 1-to-1s. So that's the two that I use. I have my 0.25% in general for London session, and I have 0.5% risk for New York session. And then I try to either get 1-to-1s on London or 1 to 1.5s to 1 to 2s. That's my risk management. And then coupled with the best of 3. So I will never have more than 3 trades a day. So the maximum amount that I can lose in a day is going to be a combination of, for argument's sake, how many 0.25% trades I took versus how many 0.5% trades that I've taken. But in general, I cannot lose more than 1.5% a day. That's if I take 3 0.5% trades a day. I cannot lose more than that. Technically, I can't lose more than 2. I can't lose more than 2%. Because, not 2%, 1%. Because if I follow my best of 3 strategy, after I've hit 2 losses, I'm done. So, and if those 2 losses are 2/4% trades, that's 0.5%, I'm done. If it's 2.5%, I've lost 1%, it's done. So I can lose maximum 1% a day. And that's how that's how I've managed to keep my prop firm accounts, whether they're evaluation or if they're funded accounts, kept them going. And I trade them exactly the same way from evaluation all the way through to funding. What do I think of UJ? I think we already went through UJ. So this was Henry's trade. So we've already gone through UJ. Tapo currency, please refrain from spamming. Zil Milken saying, so if I have a limit order or stop order, it will activate with the news. It's going to be breaking the rules. Yes. It's as simple as that. No new orders, no initiation of new orders. It can be a stop limit. It can be a stop order. It can be a market order. It doesn't matter. If it's within that 4-minute time frame, unfortunately, if you do have a loss, it's going to count against you. And if you do have a win, they will most probably, that will not count as well. So I would really refrain from trading during that time. And especially if you know that the news is coming, maybe consider removing that stop order and then trying after the 2 minutes kind of like thing, because it's just not worth it. And if you get too many of these strikes, then obviously you're going to lose your account. So I would really refrain from that, from doing that. How to be consistent? Is it boring? I don't find consistency boring, to be dead honest with you. Consistency to me means that I have complete control over what it is that I'm doing. And if I have control over my decisions and I have control over my actions, I don't find that boring. I find that quite invigorating. So if I entered a trade and it went in my direction, it doesn't matter. If it goes against, it doesn't matter. The only thing that matters to me is did I follow my plan? And if I followed my plan and it then goes in my direction, I'm ecstatic. And if I followed my plan and it didn't go against me and it hit my stop loss, I'm fine, because I expect to lose some trades as well. So long as I'm consistent, I'm happy. And the thing is, I don't find consistency boring. It's genuinely not that. Fred Fern, hi, I'm new. Could you tell me when the futures is going live? It should be very soon. I don't have an exact date, but we're all waiting patiently for that, Fred. We really are. We all want to jump onto literally the best prop firm that is now also going to add futures. We all want to do the futures. So I would say just keep an eye, rock up to the live stream. At some point, that information is going to go live. I think it's actually a good thing that it's taking a bit of time, because you know that they're putting all of the right effort into getting the right product to be released to everybody. So they're working through all of the kinks and issues that there may be with the platform that they're going to be using. So I would just be a little bit patient. It's going to be soon. Mon, good evening. How are you? I'm good, mate. I'm really good. Snipers, I'm waiting for news, and if it touches below 4430, I see an opportunity for long. So we have news. It's now 2:30 my time. We're still at this break area. We've kind of just swept the low of the day, but it's still within that base area that I've already marked up. So there is a potential, but it's all gonna be reliant on news. We do have a lower high here that is being tested right now, and it's not really in a downward. It's not really in a range. We do have a little bit of consolidation over here, which can be tested, I think, potentially. But so far, still very much caught in between these 2 points for now. Still waiting for news. But I do like what you're saying. You're going to wait for the news, and if the news gives you what it is that you're looking for, then you go for it, mate. Soham is saying, hello, in my funded account, I have made 2% throughout the day, total 3% up. What should I do, whether to trade further today or not? So generally, when people ask questions like this, I will always ask this: what does your plan say? If your plan is saying keep on trading until the end of day, then follow your plan. If your plan says you should stop at 3%, then follow your plan. If your plan says you're only allowed to do 2 trades a day and you've done your second trade today and it was a win or loss, doesn't matter, follow your plan. So I would say follow your plan. Your plan should include what do you do if you've made X amount of profit for the day, or your plan should include if I've reached X amount of trades or executed X amounts of trades. I think a lot of people have this idea in their mind that they have to constantly be trading. And that's just simply not true. You don't have to be trading the whole time. It does wonders for your psychology, taking a winning day and saying, I'm up 2%, I'm up 3% on my account, great, I'm done for today. You know, tomorrow is still another day, you can still do it. I would genuinely just say, you know what, follow your plan first and foremost, but secondly, just realize that you don't have to trade every single day. It's just take a day off as well if you have to. And also, if the market is not giving you the right movements, let's say you are a breakout trader and you're just not getting any breakouts, step away from the market, don't force it. Shursing saying, hello sir, good evening. Oh yes, that one there. Hello, my account. Yeah, we've already checked that one. Atash saying, where you trade, buy or sell. Well, right now I'm not really going to be putting any new trades. I'm waiting for news. So it's outside of my trading time right now. I'm waiting for NAS because I only trade the NAS specifically. I've already had a singular trade today. I am waiting for New York to open, and then I will look at more trades. However, we do have Jolts opening at 5 o'clock my time, and ISM PMI services PMI as well on top of that ADP. So I would probably not be trading in any way, just because this can cause volatility and it can really screw with the directional movements that I'm looking for. So I'll probably wait. What is your RR? Can you explain? So RR is risk to reward. So it's how much I'm risking versus how much I expect to gain should I win. So what I'm risking is 0.5% as an example. So just to give you an example, a 1-to-1 in this case, 1% or 0.5% would be $40, and then I would try and make 0.5%. So that is a 1-to-1 R. I'm risking 1 to make 1. If I am going for a 1-to-2 RR, I'm risking 1 to make 2. So I'm risking 0.5% to make 1%. And it's just maths. That's what I use. I use 0.5%, 0.25% for risk, and then I try and make 0.5% in risk. Well, with 0.25%, it's 1-to-1s. So I'm trying to make 0.25%. With 0.5%, I'm trying to make 1.5, so 0.75% or 1% of reward. What time frame do I use? I've already mentioned that. I want to start a calendar. What is your best offer now? So I think our 2.5K high stakes account is still ongoing. Don't quote me on that though. You can go and check. If you go into the Fivers hub, you can, when you go and open up or buy a new evaluation account, you will see on the high stakes portions, the 2.5. If it is still $12, because I think that is the only discount that we've got right now. At least that is what we had going into the new year. I believe we still have it ongoing right now, and you can still buy those, but I think you can only get one per person now. It used to be 2 per person, but you can start there. You can start with the 2.5K for $12 if it is still running. Otherwise, I would generally start with a smaller account. I would start with a 5K. The 5Ks I think is $48, maybe even less. I haven't checked that in a while. Please don't quote me on that. But you can get all of that information in the hub. The links should be in the description box below. If they're not, then you can just go to the Fivers So thefivers.com, just hub.thefivers.com, straight up. That's the thing. Do you have coupons for buying prop firm challenges? The coupons that we have, they are credits, and the credits you usually get for you can get a giveaway credit. If you have an account and you're in the Discord, we do have every single day in the Discord, we have some of the members that have live streams that they give. Victor is one of them, LJ and Akram is another one, and then Richard Wells has one on Thursdays and Fridays as well. And generally in there, they do give away hub credits, and the hub credits you can use, they have an equivalent dollar value. So if you get 10 hub credits, it's equivalent to $10, and you can use that to buy accounts, buy valuation accounts. But other than that, we generally don't have coupons now at this point in time, or at least I don't have the authority to give any away. So let's not bring that up. When are the news released to avoid? So FM Art, you can go on to forexfactory.com. The Fivers uses the Forex Factory's data releases to determine when those 2-minute, 4-minute no trading high news brackets are. The nice thing about Forex Factory is that it syncs up with your time frame. So I'm UTC plus 2. So the news information that I get here is UTC plus 2. So I know at 3:15 this afternoon, 2 minutes before then, I shouldn't be trading. So you can go to forexfactory.com calendar. It is a free to use platform, and this is the one that the Fivers uses for their information. So that's where you can go for that one. Oscar asking, hello sir, do you normally add positions to a winning trade? I do not. No. The reason for that is because I want to make sure that I stick to my expectations. And my expectations is built on my backtesting. And my backtesting was done with singular entries, with set stop losses and take profit points. So I try to keep that as much as I can. I do know a lot of people that do that, but I don't think generally that the lower time frame is great for that. I think the hourly and up is a little bit better for adding to positions specifically, because you're giving the trade a lot more time to play out as well. And especially if you can get into nice long rallies, as an example. So for the sake of argument, we entered a trade as it was struggling to push lower. You entered a trade over there. You had your stop loss below that swing point, as an example, and you have a open take profit. What I would think on the hourly would make more sense is every time you have a swing point, so you have a swing point over here, you just kind of draw your stop loss to just below that swing point as you're going up with price, and then eventually at some point one of your trade might get knocked out. Like over here, most probably is where your trade would have knocked out. Slightly below that, you would have gotten knocked out over there. And if this was your entry, you would have gotten a 4R trade. I just feel it works better on the higher time frames, adding to a position or holding a position, as an example. So what you could do here is you could manage your stop losses, but you could also enter a trade every time there's a swing point that confirms that it's continuing higher. So you've moved up your stop loss from down here to break even, maybe, or to the swing point, and then you add another trade here with the same idea as you were managing it, but you manage it slightly. You manage it slowly, like the same way. So as your main trade is going through, your secondary trade is doing the same thing. But I don't tend to do that at all. Like I said, based on backtesting and what it is that I'm looking for, I try to keep to my expectation, and adding to trades is not what I do. Not that it's I don't think it's not a good idea. I think it's a good idea, especially if you can manage your risk really well. I would not go into 1% trade and then adding another 1% trade and then adding another 1% trade. I would go fractional, and I would say, for today, I'm willing to risk a total of 1%. And then, let's say hypothetically, I go 0.25% every time I do a new entry. So I enter at 0.25%, I wait for it to move in my direction, I move my stop loss, I enter another 0.25% until I eventually reach 1% in complete risk. And then as it keeps going and as I'm pulling my stop loss up, you're basically mitigating the very next trade's risk. So even if you do lose that next trade, the third trade or the fourth trade that you're entering, the other three trades will most likely be in profit at that point. So you'd probably not lose all that much. We've already checked gold. Still available. The offer for $12 for 2K. High stakes till 11. Thank you very much, Iwana. I don't know if I pronounced your name correctly. I do apologize if I did not pronounce it correctly, but thank you for the information. Cool. Till the 11th of January, you still have that offer. So $12 for a 2.5K high stakes account. The high stakes account is great. You have a 1-to-100 leverage. You have the same scaling as every other high stakes account. So the 5K, the 10K, the 20K, the 60K, the 100K, all of them follow the same scaling structure, and you could scale it up to 500,000 per account. So how great is that? How do I get to the Discord? Okay, so the Discord is there's a link, but the link you will only get if you have purchased an evaluation account. So like Iwana has just said, $12, you can get yourself a 2.5K high stakes account. And then once you've verified that you've purchased the account, you can contact support. Within the hub, there is a little box at the bottom right. You can contact there and they will verify that you've purchased an account, and they will give you a link to the Discord, and then you can join the Discord. The Discord has thousands of awesome members. We've got 2,877 members online right now, and that's not even to talk about the ones that are offline. It's a massive community, and I would advise it. There's giveaways every day, like the hub credits that we give away. There's psychology sessions. There's trading sessions. It's really worth it. And now is the best time as any. Get yourself a $12 2.5K account. Yeah, and then you can get access. Sam is saying, Sam, by the way, is part of our community. He's a community manager for our Discord. The Fivers will change the 20K to 25K and the 60K to 50 on January 18. So if anyone is looking to get a 60K, do it before January 18th. That's awesome. I have a 60K, so if I want to get another one, or if this one were to fail, or if I were to not have this one anymore, I would have to go to 100K or a 50K. So that's a good thing as well. Thank you very much for that one, Sam. Random Stuff is saying, just requested a payout into Credit Hub to buy new high stakes challenge. Which is better, 60K or wait for the 50? I think, Sam, correct me if I'm wrong. If I haven't seen this. This is the first that I've heard about the change that's coming. If the pricing is less, you always have to go and see whether or not what it is that you yourself need out of an account, as an example. So if you're good going away with a 10K account and you don't really need more than, $100 to $1,000 kind of like a month payout kind of like thing, you don't have to go very large. So you're going to have to go and do some calculations to see which is better. Personally, I don't really care about the size of the account, so long as the payouts that I'm receiving from the accounts fall in line with growth for me. So I don't want to get marginal payouts with like a 5K and then only get like $30, $100, that kind of like payouts. So I would suggest you go do a bit of math, M-A, not M-E, math, and then go and figure out what it is that you need from an account and then work your way from there. But I love the 60K account. I really do. I think maybe there could be like a psychological aspect to trading as well. or the sizes of the accounts. So to me, it doesn't really make much difference. A 5K for me is the same as a 100K in terms of how I manage it. But in terms of what it can mean for me in terms of like it's vastly different, obviously. But I'm referring more to the psychology of it. Like people see a 100K account and they see, $1,000 per trade, and they lose their minds because it's too much. But when you go and look at it relatively, it's still just 1%. So that's what it is, I think. Martin I, hello Richard, can you check on Euro USD? My view on Discord, like always. You see, this is what I like. So Martin is part of our community as well. He's part of our Discord, and in our Discord we also have a trade setup section, which he's dropped down very much. He's put in a buy, so I will mark out his trade 16901. Yep, over there. Stop loss 16589. All the way down here. I should maybe go on to the time frame that you generally trade, right? So all the way down. Maybe I should just do this. Stop loss at 16589. 589, and take profit is at 17,290. Okay, so we were looking at Euro earlier, and it seems as though there is the potential for it to want to push lower because we are in this slightly bearish movement, and we have yet to break this downward structure. Granted, we do have this sideways action over here, which is usually a telling sign of weakness, or at least let's not say weakness. I think weakness is the wrong word. Indecision. We don't quite know where we want to go, so we slowed down ever so slightly. It doesn't look horrible to me. The fact that you have your stop loss below a recent swing point, or not like let's say recent swing point. But my only concern is the fact that we are still in a downtrend. But other than that, it doesn't look bad, mate. We do have, I think this is on the 15-minute. This isn't a trade that I took. It was just a trade that I marked up just to have a look at yesterday. Yeah, we're still printing lower lows in general. But overall, I don't mind it. I probably would have waited to enter. I probably would have waited for this first to be hit where your stop loss is currently. I would probably have waited for that either to be rejected from, because it's just a stronger area to react off of, I think, because there's very little price action around it. Yeah, I probably would have just waited for that, but I don't know. I'm not really seeing much strength in the euro at the moment. It did have a reaction down here, but still overall still bearish. So yeah, Martin, I'm just going to say, dude, you know what you're doing, and you keep doing what you're doing, because you've got some really good trades, mate. I'm agreeing with the direction. I'm just disagreeing with the entry point. Like I said, I would have wanted it to test here first, but that's just me. Maya Trader, I just passed my 60k high stakes. Phase 1 today started at 15 December. Finger crossed for phase 2. Well done, Maya. Like, that's awesome. I love hearing people passing their first phase, second phase, and getting into funded. What you're going to do now is you're going to replicate what you did for phase 1 going into phase 2. That's all you need to do. You just need to replicate it. Same consistency, same intensity, same thoughtfulness. Just make sure that you don't blow or put this second phase on a pedestal. Don't blow it up to become something that it isn't. It's just another phase. You've already proved to yourself that you've made it past phase 1. You can do it for phase 2. Go with the same consistency. And congratulations and good luck. Sam saying, I would recommend people to wait for the 25K and avoid buying the 20K amount, but 60K is better than 50 in my opinion. More is better, apparently. Ioana saying, yes, it's correctly. Oh, I'm happy for that. Thank you. Thank you, Richard, bro. I appreciate a lot of your suggestions. Since I'm in the learning phase, I don't know a lot of such things related to psychology and discipline. It would help a lot in future. Anybody can come up with a strategy. Anybody can go and watch a video and they can learn how to either do analysis or to build a strategy. But the biggest problem that people struggle with is psychology. It's risk management. It's the impact of risk management. It's the impact of going into drawdown. It's the impact of risking more than what you're comfortable with, and so on and so forth. But it's all psychological. It's all in your head. And that is a day-to-day challenge. If you have a strategy that you've built, you've back-tested, and you have data available, you can always reference that. You can always go back and say, you know what, I have this information, it works. But psychology is different because you can go into slumps very easily. You wake up on the wrong side of the bed in the morning. I don't know, you accidentally kick the dog and then it bites you and you're just in a mood. That's going to impact your trading. Whether consciously or subconsciously, it's going to impact your trading. It's the psychological side of trading I find the most difficult, but I also find the most rewarding. It's the side that I know that if I work on it on a day-to-day basis, I will make either small improvements or I will lessen the impact, the negative impact on a day. Like yesterday. Yesterday was a horrible day for me. I slept horribly. My body is tired. I've been exercising. It's with a good cause, but I know that there's downsides to it. There's going to be discomfort. I'm going to be annoyed, all of that kind of like stuff. And it impacted my trading. I made a decision to take a trade during my morning stream session that was not according to my plan. So it did impact me negatively. But this morning I woke up, I went to the gym, I felt a lot better. I have some magnesium tablets that I'm taking. I'm eating banana, so I've got more potassium in my system as well. My muscles aren't as sore. I'm a little bit stiff today still, but better than yesterday. Making better decisions, following my plan. So, like I said, the mental reaction, the psychology of trading, I find the most difficult to maintain, the most difficult to be consistent in. Tim saying, Happy New Year. What platforms can Fivers be traded on? Is TradingView going to be an option? I don't know about TradingView, but we have two options. You have MetaTrader, which is, let's say, the industry standard, and then you've got CTrader. So you can get it on either one of those two. I don't know if there is a plan to go onto TradingView. Not sure. But the two ones that you do have is CTrader and MetaTrader 5. Brian, where in South Africa are you based, Richard? Could get some good meth. I'm based in Mpumalanga, which is province. I'm in a town which I'm not going to name, but I live in Mpumalanga. I used to live in Gauteng, and now I'm living in Mpumalanga. Davide is saying, hi everyone. What's up, Davide? Anan is saying, I want to join the Discord. Where is the link to Discord? Like I explained earlier, the Discord you can only get in on if you've purchased a evaluation account. We have a $12 2.5K high stakes account that you can get now. It's the cheapest account that we have. It's well worth it in my opinion. Because that can be scaled up to 500,000 and it follows the exact same scaling plan as the 5K, as well as the exact same payout structure. So your profit split is very good with the high stakes accounts. You can have it up to 100% profit split when you go into the higher phases or the higher scaling portions, but in general it's 80 to 20. So you get 80% of your profits and then the Fivers takes the 20. It's well worth it. So go and get yourself a 2.5K account, and then you will be able to contact support, and then they will give you the link. Sam is saying currently the 20K is $165 and the 25K will be $195, and the 60K is currently $329 and the 50K will be $300. So $20 discount for 10K. I would then, in that case, would still go for the 60, because for $20 more, you're getting quite a bit more in terms of account, and your if you do scale it, it goes. Your 50K would eventually go to a 60, and then so on and so forth, where your 60 is immediately going to go up. So I would just go and get the 60K now. But the 25K is also well worth it. Nubik asking, what is your prediction on gold? I tend to not predict the movements, because I'm not a predictive trader. I am a reactive trader. I wait for certain levels to be hit, and then based on the reaction from that level, I will then take a trade. So in general, I don't try and predict, but what I can tell you is that for today so far, we've been in a bit of a bearish movement. We've attempted to try and push higher, but we failed. We've come back down into areas that were tested previously, consolidation areas of order blocks on the lower time frame specifically, and we've had multiple reactions in this area, but we have yet to have any sort of push higher. So I still have a bit of a bearish bias over the day up until the news, which is going to come out in 14 minutes. So until then, I will keep that bias. But other than that, I don't try and predict it. Like I said, I try and see reactions at specific areas where I assume price can come back to. So in this case, there are some areas that I refer to as bases. So this is a base over here. If price were to come back down to it, we've already had a singular reaction over here on that base area. So I would assume that if it were to come back down to this area, it would come and test here. And then I just wait for how it reacts at this point, and then I decide. That's how I do. I'm holding a UJ long trade entry 15652, stop loss 15629. Okay, so you're also in a long, so you're aligned with with Martin. I literally just forgotten your screen name, which is Martin I, and I was just like, what's your screen name again? All right, so you entered you entered on 15652, so a little bit lower than Martin, so over there. So you've entered now, pretty much, and your stop loss is 156,299. Okay, so yours is the recent low down here, fair, and your take profit is 15. Oh, you're risking a 1 to 2. All right, so you're all the way up over here. So somewhere over there. So 15696-ish. So that coincides with this swing point over here. I'm just going to call it a base because I like the see-through colors. All right, so you and Martin have a... No, wait, Martin is not in this. Martin is in Euro. Sorry, Martin. I was looking at this one that I marked over here, and I was like, oh, this is Martin's trade. My apologies. No, you're in Euro. Okay, so this is what you're looking at. I mean, fair. I do like where your stop loss is, because we've had multiple reactions down here. So 1 establishment, 2, 3, and then 4. Yeah, I like that. But personally, I would... sorry about that. I would want to see what the reaction is over here. There is already this base area over here that is already an established point. So price is pushing lower, it tries to push higher, it reestablishes a downward push. This was the last area where price tried to push bullishly before giving over to the bears. So this area over here above that one. I would say somewhere over here, test point. But if you're in the trade, you just got into it now, it looks good. The only worry that I have is that where's the follow through? Like we've had, if this is a recent high, we've had an equal high, we've had a slightly lower high. Yes, we are slightly ascending, but we're more flat now. So whatever your reasoning was for entering, I'm pretty sure you thought it through. I do like the stop loss point, to be honest. Maybe a little bit lower, just underneath this point, the most recent swing point. Give or take 1 or 2 pips below that. Maybe even a little bit more, like up to, let's say, 4 pips or so, I think would be great. Maya, I would also wait for further confirmation before going alongs on EU. The price action seems still bearish to me. Very much agreed, Maya. I definitely view it more in that line. Discord link, please. Like I said, you need to buy an account, and if you've bought an account, you'll get a link by contacting support. But other than that, they're not going to like give you the Discord. The Discord is very exclusive. Like very, very, very worth it, and all it's going to cost you is an evaluation account. And here's a cool thing: the majority of the accounts that we have, once you've passed the account into funded phase, they give you back some of your initial purchase fee. You will get it in hub credits, and then you can use that to get more accounts. So it's always worth it. Some of the accounts, not all of them, obviously. Nassim saying, nah, psychology is easy. Finding a real edge is the hard part. Well, your psychology is part of your edge. So I'm going to completely disagree with you on that one, but that's based on my opinion. And you can take my opinion for what it's worth. You can disregard it completely if you want to. Is the Discord on every day? Yes. Is running 24/7. There's a bunch of people, like I explained just now, in the Discord right now. There is online on the Fiverr's Discord 3,030 people, and that includes mods. The team members are also on that. The partners as well. The information that you get on the Discord is well worth it. So I would seriously get an account. Fred, I am assuming you're in America because you're asking about futures. In your case, you will have to wait for the futures platform to be released, then buy an account, and then from there on, you'll get access to the Discord. Or you can use, I think, CTrader. I think American people are allowed to use CTrader, but please don't quote me on that. Anyway, in the background, we have 2 amazing traders. Well, one is in the foreground now. Victor, what's up?
Hey, Richard. How are you doing?
I am swell. I am absolutely gravy, baby. I'm good.
I'm glad to hear. How is everyone doing? We are minutes away from ADP news being released. And that is 2 days before NFP, normalized NFP after US shutdown. So it's going to be fun. How has your trading been so far, Richard?
My trading today has been decent. I got a really, really nice trade last night on NAS. I got a nice little 1 to 1.5 R trade. And then I took a small little scalp on my stream account this morning, which was also successful. So 0.25% gained on that one. And then on this one, I got 0.75%. So good. But overall today, NAS wasn't really giving me what I wanted. There's high impact news coming, so I would much rather just wait for the high impact news, the JOLTS job opening and the ADP non-farm employment change information before I make another decision. But other than that, I'm not really in anything at the moment. Kind of just sitting on my hands.
Yeah, I always love the organized chaos that I see when I see you. Now I see a little less of that.
Less organized chaos. What are you referring to? To the chart or my person?
I mean your way to your hairstyle. I always like the organized chaos you had. Yes, actually, I like that a little bit better. Yes, yes, that's the Richard I know, uh, and I've come
It's because I went to
to
the gym.
appreciate so much.
I
I
went
beg
to
your
the gym
pardon.
and everything is just tired. So even my hair is just like, ugh, I'm tired today.
How was your gym, by the way?
Uh, Better than yesterday. Not gonna lie.
Hmm.
I started gymming on Monday. I've been out of the gym for way too long. My body is just not used to it anymore. I'm turning 38 in a month, so I feel like I'm getting a bit older. So my my ability to just recover is a little bit stunted. Not like when I was in my early 20s. Then there was no stuntedness whatsoever. So yesterday, Monday, tired. Today, much better. So hopefully it will carry on being better as we go on.
38, you said.
Yes, I'm turning 38 in February.
Ah, okay, so not even there yet. Uh,
No,
great, great.
not even 40. Already complained.
You're so young. I like that. So I'm not gonna go ask whether or not gravity is being nice on you. We leave that for the imagination of the viewers and the listeners. Maybe they can fill that in with their, creative thinking. Richard, are you waiting for anything specific on the chart since we have news coming out soon? I know you trade NAS and you probably need to wait for some New York Open and so on. But are you looking into the higher time frame areas where you're likely to be taking a trade?
So I still have this same converging channel basically that I'm still looking at. We did have a very slight sweep last night above this area. So I'm kind of anticipating the potential for us to try and push higher yet again. But bar any sort of like news reaction, I will almost always try to see if there's a reaction off of my bases. So I would much rather wait for price to come back to a base, or at the very least, something like a bit more of an order block to see a reaction there. Came into an order block, started pushing out of it. Looks like it may potentially come to retest it. So I generally wait for the reaction to happen instead of saying, oh, I think it's going to go here and then I'm going to react. Generally more on the basis idea, I would say. So I'm waiting for
Perfect.
either the news to push it into an order block and disrespect that order block, create a new upward bullish trend, or have it disrespect it completely, start breaking lower, and then see how it reacts on my basis.
Yeah, I think you're making space for another painting. Are you?
They could be another painting, yeah, right behind me, right here.
The
Ooh.
lions.
The line is
Yeah.
up over here. I've moved things around a little bit. My wife has drawn, well, not drawn, painted a scene from an anime that I like, and she's busy framing it. So I'm waiting for that one, and it's done completely freehand. She's just looked at the picture, or at the screen grab, let's rather say. She's looked at it and then she's just painted. So I'm waiting for that.
How did that special effect sound go? I like that. Butler, it's always it's always great to stream with you. Yes, I I'm not a creative type. So I can only look in and watch in amazement others do anything creative. I'm much more numbers. That's what I do. Let's take a look at. We have I think 1 minute. Let's check. Yes, 1 minute to go for the ADP numbers. ADP is not as big as NFP, of course. NFP being one of the biggest numbers. I've switched my screen to my screen to the viewers, so we can watch the EU chart on the minute and see what the reaction is going to be. Right, the next we are just one price is moving before the news. A little bit, not really a lot, but there's a little bit of a reaction there. There we go. That's the news coming out here. Not much really so far. Only what a couple of the pips on the first initial reaction. It's not really anything. 2.7. That's nothing really. So actually, very muted reaction. We're gonna see maybe sometimes it takes a couple of seconds to kick in and start moving. So I hope everyone who is on the high stake account, that that you were not supposed to take any trades 2 minutes before the news. It's a red folder news, so that's restricted on the high stake account program. And if you are even if you're not on the high stake account, I hope you're not scalping with a tight stop loss right before news, because that, of course, it's likely not to end up too well. So, not much of a reaction. Of course, this is before NFP this Friday. So it is sometimes ADP can move the market beforehand. Other times it just has it's like an upstage to the actual move, which comes from NFP. So we can come back to what we were discussing in the meantime. So are you just waiting for your blocks, you said? Is there anything popping up? Are you enticed to do anything later on? Not really.
No. I've found that for me, it's just better that I stick to what I know. So it's that idea of the patience. I will wait for the New York Open, and then I will wait for any sort of indication of it, wanting to go in a certain direction. Right now, we're still losing on the day. We opened up much higher, and we've still pushed a little bit lower. We've kind of lost that downward push, and we started gaining a little bit more grounds. We really slowed down over here. We took a recent high swing, and we've created a new low, higher high. So we're technically in a very short-lived upward trend at the moment on NAS, on the 5 minutes specifically. But overall, if I go over to the hourly, it's still very much a little bit of a pullback from this very strong downward push from last night. Well, from this morning's hours. But overall, we still have this very, like I said, higher time frame convergence that's busy happening, from very large points down to a little point, sharpening, let's rather say. So I'm just waiting for it to just give me what I'm looking for. What I'm looking for, I'm not seeing right now, at least.
Okay, so you're going to be sitting on your hands, but actually you had already your trades in your pockets. So on your pocket, so it's easier to wait when you're standing on profit.
Well, even if I do have a loss for the day, that shouldn't matter. The idea should still be that if my plan states that I need to enter with certain confirmations, and if confirmations aren't there, I'm not going to try and force it. I'm over that. That's 2025 Richard. 2026 Richard is patience. He is Mr. Patient himself. So I will just be a mushroom cloud of patience right now. So Zen, just sit here.
What makes you? What? Go ahead.
There's a few questions that I can't mark them. There's one from Tiny Toons about 19 minutes ago asking, this one. If we can just mark that one, Remy, I would really appreciate that because I'm probably going to be jumping off now. That's a good question. And then I just want to mention this. Anand saying, I currently have 2 accounts with the Fivers, 1 bootcamp, second phase, 1 high stakes phase. I cannot get access to Discord from my dashboard. In that case, I would say the same thing I said earlier, contact support. Let support be the one to assist you with this. That's why they are there. If the button is not working, I don't know if the button is there. From my memory, the new hub doesn't have the button and you have to contact support. So just contact them and then have them verify. So this Tiny Toons question, I think, is a little, it's a larger than what I think I've got time to answer. Hi, Richard. I have a genuine question. Please answer. I have been trading for 2 years now. I somehow pass most of my evaluations, 15 out of 21, in 2 evaluations. But now, however, when I reach the funded phase, I blow it all up. So this is very much a loaded question. There's a lot to unpack here. I would say in the simple answer would be this. Replicate what it is that you did during phase 1 and phase 2 during your funded phase. Try and step away from the idea that this funded phase is anything more than just another phase. Consider it evaluation phase 3 or evaluation phase 4 or evaluation phase 5. Remove the stigma. Don't put the account on a pedestal once you get to funded phase. That is the short answer. The long answer is going to require a lot more context. It's going to require a bit more from you. What's up, Sam?
How are you?
I'm good, and you, Samir, mate?
I think I interrupted you. You was answering someone's question.
Yeah, but it's very short form. It's just going to require a bit more context from your side, Tiny Toons. Do me a favor, if you mind staying around, Tiny Toons, just get the information from Victor and from Samir, and then come back tomorrow, and then we can go into more in-depth information there, because tomorrow is Thursday, and we have Richard Wells in tomorrow, I believe, and he's the psychology guy. He's the Fivers performance coach, and he's got some real like in-depth knowledge about the psychology, and because this is a psychological issue, I don't think that it is a strategy issue or anything like that, because you already have the data that you've passed phase 1, passed phase 2, that kind of like thing. So Victor and Samir, I'll leave the rest of the questions from there on downward for you guys, and then if Tiny Toons comes back tomorrow, I will also give you my input as well. So please come back again tomorrow, Tiny Toons.
Thank you, Richard, for everything you do. Every day you are on stream. On behalf of every listener, of every resident of this planet, thank you.
Thank you very much for the very kind words, Victor. You humble me every day. I rock up here with this massive ego, and what you do is you just inflate it even more. So thank you very much for inflating my ego. I am a god amongst men. No, I'm joking. No, but thank you for the kind words. I really do appreciate it. So it's a shame that Victor and I don't get all that many opportunities to continue streaming. I love those 2-hour conversations that we used to have, and now it's boiled down to a 20-minute conversation. So, which is sad. But yeah.
Better times are coming, Richard. Better times are always coming.
That is true. That is very true. Samir, I'm happy to see you as well, my friend. I'm glad that you're back.
Same here.
Wishing you a very, very happy and prosperous new year. And also wishing you for I just wish that you're happy, mate. I just wish happiness upon you. So same with Victor as well. I said this to Victor yesterday. And everybody in chat as well. I wish everybody is just happy. I wish happiness upon everybody. All right, guys, I'm going to love and leave you in the capable hands of Victor and Samir. Guys, take it away.
Thank you and bye.
All right.
All right.
Bye-bye. Samir, Happy New
Long
Year. I
time.
didn't get a
Happy
chance
New Year. Yeah.
to say anything to you yet, but Happy New Year. I wish just with as with our other colleagues, hope this year brings you a lot of great stuff, if not a lot of profits, at least great lessons from which you uh, you know will be able to grow even more.
Thank you so
Samir, I
much.
got a
And
question for
again,
you.
yeah, yeah.
Go ahead.
Again, I wish you the same. Happy New Year to you also, and I wish you grow more, and you just continue to grow with every day. Every day you just grow, you just make more money, you just stay happy, be happy. So I wish you know that for you this year,
Thank you.
the best year for you. You were saying something,
All right.
yeah.
Yes, I let's get back to Tiny Toons, who had a question 26 minutes ago. It
Tiny
was
tunes, okay.
directed to Richard, but we are falling in for filling in for Richard, at least not filling in. He was here. He completed his slot. We are just taking over. Richard, he says, "Hi, Richard. I have a genuine question. I've been trading for 2 years now and somehow passed most of my evaluation 15, 21. I think that's 15 days, 21 days. I'm not sure what 15, 21 is. Um, or most of my it's a 50 out of 21 evaluation. Okay, so 75%, more or less, out of all the evaluation. That's a good number, by the way. Two evaluation now, but whenever I reach funded stage, I blow it up. Yes, rightfully so. Richard mentioned that this is not something that has to do with your technical edge, because you clearly have edge to you. Uh, well, you need to know the number of trades you're taking, but if you're passing three-quarter of your accounts, that sounds like you have a there's enough reasons to believe you have a solid edge there. However, it's about your mental edge, what the issue here is, because the market didn't change from evaluation to funded. The account conditions do not change. The only change is, and actually, even the numbers on your chart, on your terminal, they did not change. The only thing that changes is um, you being aware that now you are on a funded state. So that's a mindset, mental issue. And I may not be able to give you as many tips and tricks as perhaps our performance coach, Richard Wells, the other Richard, who is great at helping traders overcome these issues. But what I can tell you is I can give you at least one hack that you can apply, uh, to address this issue, or maybe not to address, to bridge the issue until you addressed it completely. One thing is, um, by having by trading out of a master account. Let's say a can be a live account, but it can be also a demo account, and you always trade watching the same numbers, the same balance, the same equity, the same lot size on this master account, but you copy the trades into the whatever evaluation or funded account in the background. That means that your mind, your eyes, you're not going to be watching the account, the actual account, the funded account. You're watching the master account, and this can be done for free. Of course, you can do this paying, I don't know, like $10 a month on different premium services, copy traders for services. But you can do this for free. I'm not affiliated with FX Blue, but FX Blue is a very popular, has been long time in the industry, and it's completely free to copy, from the master account to the slave account, the one receiving, the receiver account. And doing this, at least you're not going to be watching the screen. You're not going to be watching the account. And even though there is a slave account connected, the funded account is connected, it may be enough to trick your mind into thinking nothing has changed. from the, because what you're basically doing is you're um, making it as identical also visually from the evaluation period to the funded. Nothing changes. The account you're trading is the same. The numbers are the same. The lot sizes are the same. When you see P&L going up, because you have the same lot size, and I assume you will be trading the same strategy, you'll be seeing the same numbers going up and down. It will should not trigger you on unless you start thinking about the funded. But you should trade your just trade that account as if there is no other account. That is something that could help you overcome the fright of a funded stage. I um i used it personally, so I know it's very effective. What I do is exactly that. I have one master account for each strategy, and I only trade on that master account. Everything else is copied, and actually, I'm unaware, I'm oblivious of all the other accounts that are connected, and that has helped me greatly. I don't. It's not there. I'm focusing on what's in front of me, which is the chart, and I'm trading my edge, and I don't have to worry, if I'm going 5K up or 3K down. If I have a 10K day, I don't see it. I only see a fixed number, and it keeps my emotional level neutral, and it's to me it has been a great hack. Um, so I recommend you. Maybe it can help you as well. So in short, putting a live or demo as a master, and then everything else as a slave, and only one, and trade fixed lot sizes on that master account, so the P&L never really changes. The swings in P&L doesn't change. All right, so that was Tiny Toons. How would you answer this question, Samir? Someone who has difficulties in the funded stage, but is able to pass most three-quarter of their evaluation accounts, but comes to funded stage and blows it up. What would you say to
Okay.
someone like that?
I have been there, Tiny Toons. I know how it feels, and I have got stuck into the same stage for a quite long period of time. And I think the way you think, your foundation is not built in a right way. What do I mean by that? You might be, trading aggressively, or you might want to make money quickly from that live account, or you might want to replicate the performance that you had in phase 1 or phase 2 if you had a good winning streak, or a good trades in phase 1 or phase 2. Somewhere you want to replicate that same, maybe behavior, that same performance in live account. This is the one thing. Okay, there can be a lot of things. You might want to make money quickly. You might feel like, this is the trade I want to be in. I don't want to miss this trade, and it will be something like FOMO, fear of missing out. So of course, it is a psychological issue. Nothing is wrong with your technicals if you can pass the account here and there. And you have mentioned that I have passed 15 accounts out of 21, which is a good number. Now, all you have to do is you have to build one habit of controlling the risk and taking less trades so that you don't blow the live account. So that is the only thing you can do. And I know why it is happening. There can be multiple reasons. As I mentioned, you might want to replicate the performance. You might want to make money quickly, or you might feel that, I don't want to miss this move, or I have met one guy who just loves to be in trades. He loves to be in trade in night, morning. I don't know. You might be that kind of guy. So you have to know where you are doing the mistake. Mistake is going to be from these few points that I've mentioned, and you have to act upon it quickly. And these small things that you are that you are mentioning, that I have passed this account, it is a good thing actually. But now you have to perform well in the live account also. So how you can perform well? By just building the right habits. Right now you might be having wrong habits. You might be overtrader like me. I was an overtrader. You might be like, I don't want to miss this move, I want to be in this move, I want to put heavy risk, I know this move is gonna make me huge money. So you have to eliminate all these, you know kind of trading behavior, that when you come in the chart, maybe you can get this kind of behavior. So these can be few reasons that this thing is happening. So of course it is easy for me to say do this and don't do this. I know it will take time for you to build that habit, like it happened with me. It took quite a lot of time to build this habit. So with that being said, I think now you know the mistake. Now we are, telling you this is the mistake, and you can do better in live account also. So take this as a sign and just act on it quickly. And how you can do better in live account also? By just building a couple of habits. That is it. I know it is easy for me to say, and it is a small thing, but to do this in actual, in live market or in live account, it takes a lot of efforts. So you have to put the efforts. So now you know the mistake, you have to act on it. And yeah, there is not a lot of, kind of a magic trick or kind of advice that I can give you, because again it comes to the same point only, which is psychology. So how you can fix it, in my opinion, you have to build certain habits. And how you can build the habits, I say again and again, just limit your trade frequency. Just make, maybe take one trade a day, build that rule. I think your live account is going to survive for a very long period of time. Let me tell you, I did the same thing, and I just ran that account for my first live account, which I passed for almost 6 months. Actually, on the seventh month, it was my mistake. I accidentally put it wrong lot size, because I was, slowly compounding my account sizes. And then I was in the 100K account size, and then I placed the same lot size in the 20K account. So that's how, I got stopped out and that account was breached. But that was my mistake. But the point that I'm trying to make here is, make few rules. Okay, this can be one of the rules. I encourage all of you to just maybe take one trade a day. Try this for 2 3 months. I think your phase one, phase two is gonna get passed easily, and your live accounts are gonna run for a very long period of time. So this is the only advice that I will give. And I think you are a good trader, as you know the charts. This move can happen in the charts. So you yourself place yourself in the move. So that's why you are passing the accounts. So it happens with me also again. So you have to build few habits. One habit can be taking one trade a day. I encourage all of you in my all live streams. Almost I say this every day, because this generally can change your life. That's what I believe. That's why I continually repeat it in every live stream. A lot of your psychology issues can be resolved with this just one hack, which is one trade a day. And of course, controlling the risk also. You cannot take 4% risk. So if I'm saying take one trade a day, so I hope you're getting my point. So that is just,
It makes a lot of sense. Yeah, it makes a lot of sense, Samir. Taking one trade a day. I personally don't apply that rule.
yeah, yeah,
Um, I don't, but I think if I needed it, it would be a great rule to be applied. What you're gaining or what you're achieving with that is slowing things down, and
exactly.
you are building a compulsory waiting time after each trade, because you only can take one a day. That means that you have to be per that rule, wait for the next day. By that time, your emotions are back to neutral. You probably forgot the loss or the win that you had the previous day. You come fresh. You have a fresh mindset. You probably have, everything. All the time that has passed probably has given you a different perspective on trading. You're fresh and new, and that could be all it takes, because the revenge trading, boredom trading, all of that is based on you know
Yeah,
triggers, emotions, and reactions from something we do not want to happen. in the
Exactly.
case of revenge trading.
Yeah.
And it, you will be losing, you will be having losses. And if you trade more than one a day, you will have multiple losses in a day. And if you're not there yet, you can't handle that. That could be, all it takes to trigger your buttons and get you into trading, taking trades that are not part of the plan, and trading differently from your evaluation, the ones that you know instead of passing them, blowing the account. You're doing something that, clearly you're being triggered in the funded stage. And I think we know why that is. It's because you're so close to the price, that you feel the pressure that with each trade, this can be real money. I know if I make good money with this, I can have a payout. And that reality puts pressure on you that you didn't have on the evaluation account, because you were still a stage away from funded. You knew if you passed it, you still wouldn't get anything. So yeah,
Yeah.
these are, I think, slowing down one a day is a great advice, Samir. Let's go move on to go to another question. We have our great friend Louis in the chat. Hi, Louis. Let's take a look. Um, Probably have, okay. So we have another question here from Young Superfly Network. I'm not sure YNG. I think it's Young. Currently, Fiverr's customer. I'm thinking about joining the Discord page, and I was wondering if you guys could tell me more about the Discord, please. Yes, no problem. Yes, the Discord is I believe, honestly believe so, and others who are part of the Discord server agree. It's one of probably the best Discord server in prop firm space. Um, the way to get in is by having an account with us. An evaluation account doesn't have to be a funded account. It can be any account. Just you have access to the hub by buying an account, and you will have on the left upper corner. Before it was the lower corner. Now it's the left upper corner. You should see a Discord icon. That's the way to get into the Discord server. If you can't see it, then check with live support on our website, and they will help you get access. It's completely free. You do have to have an account, but the server itself is completely free. And we have people there sharing their strategies, working together on risk management, giving advices. We have five every weekday, 5 times a week. We have sessions. Traders like myself and others have session there where we break the market. We share our experience, and others do that as a group. And everyone who is there becomes learns from others experiences. And it's uh, to be completely honest, it's a lot of fun. So I would definitely invite you to get there. YNG Superfly Network. There was, I think, another question somewhere. Yes, it's exactly that. The top left corner, next to the five first, you'll find the link. That's exactly. There was a question by Paulo Beranger, which is the answer that I just put in. Yes, so the access to the Discord community is in on the hub account, where you see all your accounts. On the left, there is a panel on the left side. That's where you will find the link to the Discord community. Let's see what else you were seeing here on our chat. Don't forget to hit the like button, for subscribe to our YouTube channel. Uh, let's see.
DJXS1. Hey bro, how are you? Yeah, I'm well. Hope you are well too. So let's see what we got. By the way, have you been involved with any trade today?
I have been scalping at during right before going to the gym, and actually at the gym. Um, but very, I only took a couple of trades. I'm in one right now, and all of them are EU trades. But nothing on my. I haven't traded. I haven't had any signals on my main strategy, which is based on the quasi and the order blocks from the H4 to the lower time frame. So I haven't had any trades yet. And I'll go to the EU charts and show you guys why there hasn't been any trade so far. Okay, let me. All
Are you
right,
back
so
to your setup, or you're still like
no,
out of office?
y- yeah, I'm in South America. I'm still traveling, and I will be in. I'll be back home in about 2 weeks. 2 weeks time, I should be streaming from my usual place. And in between, I'm going to the Caribbean before going heading back home. All right. So we have a question, or maybe it's a comment. Crypto night or crypto night. Hi, Victor, Gotham City Mayor. Is it possible for you to put up JBP, JPY, and dollar yen in short GJ and hatch it with? I'm short a GJ and hatch it with a long UJ. I just want your opinion on it. If you are short GJ and long UJ, okay, that's basically you're trading a GU. Um, let's take a look at these two. All right, so let's take a look at the. All right, so this is. I'm gonna take a look at the. For this time, I am not going to go from the monthly, at least not doing the actual, just watching the. If we are in any, we are interacting with a monthly. Well, I am starting from a monthly. Habits hard to let go. Uh, we are reacting off of a monthly supply area. We also there is a weekly bearish entry order block based on the quasi to the left. So there's reason for at least a reaction, something like that. There's reason for that on the daily time frame. What do we see? Market is still strong. The This is the head that would make a structural lows to be all the way down here. Actually, let me move that up. So basically, the market is being still being quite strong on the daily time frame. And if you go for intraday, which I suppose our viewer is looking at, you will have a order block, fresh order block that was created as we tapped into the area, the supply area that I just mentioned on the weekly and the monthly time frame for the third time. And that would make that area the area that is causing price to go down. We had a 4 hour order block that was firstly retested. No, it wasn't. The order block hasn't been retested, I should say. This is the top. Let's just mark this. Trying to do this as quick and as possible so we can go back to GJ. No, yes, G. Actually, GU. This is GJ, not GU. For hourly, and did we have a retest of that order block? No, we haven't. So what are we left with? So we have on the daily time frame, we are retesting this daily order block, which means that we can expect a move down. It may already have happened. This could be all it gives us. However, let's go to the lower time frame to see if what structures are we dealing with. There is an order block here, and that is likely what is stopping price. So that would be to me the field or the range for this day. And let me check the ATR for getting 51 out of 94. So there's still plenty of plenty of space for or space in the range to market to expand. news came out. There's NFP on. It's a major pair. There's NFP on Friday, so you could see some compression a day before. Usually not 2 days. So that was something. I think there's still space for in the range to expand. And in what direction would the expansion be? Well, to answer that, the market needs to tell us what it wants to do with this structure. That's the order block that is now at play. It is a fresh order block, and normally you would expect price to come in and bounce off of it, right? But as you can see, the third candle here is not showing follow through movement. Instead, is going back to presumably pierce this even deeper. If that's going to be the case, then let me check something here on the side. All right. Okay. Yes. Okay. So on it looks to me like the price is attempting another retest of that H4 order block that can be seen on the respective time frame. Is there a quasi? Is there a reversal pattern here? Not really. That means that the probability of this holding isn't great. And on the lower time frame, if we look a little bit closer, the market is accelerating. See that acceleration right there. So it looks like the market is not too impressed with the demand zone, meaning if it keeps if it doesn't change in posture, then it's likely to be attempting and has it looks to be have a good chance of breaking through and breaking down that order block on the H4. Okay, so that's dollar yen looks quite weak. There's an outside bar in progress right there. It's in progress, so we'll have to wait for 8 minutes to see if it actually prints as an outside bar, and we'll take a look at that later. And let's look at GJ. On the higher time frames, there isn't anything to see. The weekly, there is a fresh order block that was retested, was squeezed, so it's not really that important in terms of that's the weekly there. That's the only area. On the daily, what do we get? On the daily, we have clearly the order block that was created on the daily time frame being taken away, invalidated, and we have still bullish structures being created and respected. That's a sign that the market is not ready, at least yet, to break down. Right? It's not showing any signs, even though it's going. It's having 2 down days. Still hasn't broken any of these bullish structures that are created and being retested. So we'll have to see. GJ looking very strong. You have if you look at the 4-hourly, you can see clearly that we had an impulsive move up, sideways movement, consolidation, right? And then breaking out of that line. And yes, we're coming back into the same consolidation, but this is could be where price pushes higher. Could be, and I say could be because that's the market structure so far. This is the order block that needs to be taken out on the daily. There isn't anything on the 4-hour. Let me check. Okay, so there is this looks quite bullish actually. Look at that. Look at this quasi. Actually, the quasi is a little bit bigger. Let me take the biggest quasi, the external quasi, which is this. That's the neckline being broken. It goes back to the order block that was right here, and it moves out. Right. So basically, all of this can be just one. Can be considered another quasi. So let me take it like so. That's the that's the quasi pattern at play right now, and let's mark it properly with some fib. And we have one entry order block on this quasi, which is the second right shoulder being created. That's on the H4, and it's actually one huge area there, right? So it's not very helpful. I know this is the area of the quasi. You could refine that with other time frames, but it looks to me like GJ is at least on the hourlies is coming back into a demand zone, although it's not very well defined. And if you look at UJ, um, let me check what the viewer. You were long UJ and short GU. Okay, I mean and GJ. I mean, well, it depends on your time frame, of course, right? If you're in the lower time frame, it makes a lot of sense because the market is coming back into that demand zone on GJ, and other on the other hand, let me mark this. Let me put them together and have them next to each other. Okay, so that's the you're getting back into a wide demand zone. So I would be eager to see, or not eager to see, I would be watchful for a possible reversal from the demand zone, although it's not very well defined. And in the case of dollar yen, actually, it looks as a short. And I understand that you're looking to go long. Let me double check that. You're looking to go long that trade. Yes, actually, you're already long. It makes sense. However, because we're going off of a daily on the as a swing trader, I think the easy path for the market is to continue lower, right? Because we're leaving a daily and we're going to be likely be looking up for a daily structure, which, to be fair, we already did, which is this is the next structure, and we already once we created it's so close. I think we this is the likely path for price. It's right there. It's nothing, but I think there's still the easy path for price would be to go back to that area, that lower the demand zone on the daily time frame that starts at 156.26 at the moment. Hopefully that gives you some reference points, my friend. Crypto Crypto Night. Let me check other questions. DJ and Pfeiffer's Discord is the best. I certainly think so too. Thank you for those. Thank you for that nice opinion, nice words. Samir, is your session already? Is the session already offering some opportunities on your side? You're trading
I
in
actually,
NAS.
I actually already took some buys on gold in London session. So I
Mm-hmm.
am out from the market. I already have secured almost 6% on my live.
Mm-hmm.
Okay, if we see the 4 hour, what we see, we are just moving high. This was a support area in my eyes, this area. And if you go to the 15 minute, and my 200 EMA was the last support which it can provide in that 4 hour support area. So I just saw this rejection, just waited for a little bit of price to pull back, because I don't want it to risk my, not the risk, I don't want the less risk to reward. So I just took my entry once it started to pull back. And my stop loss was, I don't remember my stop loss in points, in pips, whatever you want to call it, but I remember I took 1 to 2 exactly. So I think my entry would have been a little bit deeper, something like this. Okay, something like this. My trade was very simple trade. Trend was bullish, and this was a support area. And even if you want to draw the trend line, and I was also thinking this move can be the liquidity move, and then we can push higher. So these are the thoughts which was going in my mind. So I took the buys on this one, and yesterday also I caught a small move from this NAS 100 buy, which was simple. Price was in a consolidation, big consolidation, which was actually kind of a bull flag, a big bull flag. Basically, I know it's a small tight consolidation, but I will just consider this some kind of big bull flag. Once the 15-minute closed above, I took the trade here, and my stop loss was 100 points. I still remember, and my TP was 1 to 1. But as I was already up in my live account, I didn't hold it my position to the take profit. I just cut it my position somewhere around here. So because I was already up, I don't mind in these kind of situations if you take some negative risk to reward also. I am a big believer in win rate. If you have a good win rate, your mind stays healthy, and you can perform good in next day. So that's why I closed it here. I don't want to be in that retracement move, considering the fact that I've already made significant percent on my live account. So this was my last yesterday's trade, and US 30 we are at the all-time highs actually. So now let me tell you what things can do. Either my strategy will work good in this condition, or I am gonna get some losses. I don't know this kind of once this market is moving all-time highs, I don't have experience in that one-to-one strategy trading this kind of market. So I will not touch US 30 for today. But based on my technical knowledge, all I see is this 200 EMA is way too far from 50. So if price closed below the 50, I might can take a wide stop loss and I can secure something like this if that happens. And on the other side, NAS 100 sells will be better if we close below this. Then US 30 somewhere will be supporting NAS 100 also, because somewhere both of these pairs move in one direction. Of course, not like completely, but I'm saying maybe, let's say, 60% or 70% of the time it moves the same. Of course, not the exact move. I'm just talking about the bullish or bearish behavior. I'm not saying that it will replicate every pip or every move. So that is what my game plan for NAS 100. But I'm not going to be trading because I already took one good trade here. I secured 2% here. I risked 1%, and I was targeting 1 to 2. So now I'm out, and I will be just waiting for the withdraw, and let's see how it goes. But NAS 100, maybe I can take maybe $100 or $50 risk, which is just to be active in the market, which is like 0.1% risk. So maybe I can do that. But for the technical point of view, I have to wait for the open, which is NYSE open, and we have 28 minutes left, and we can either close bullish like this, or we can close bearish below the range with this big volume candle. This will decide where the momentum is and where the price wants to go, and I will find the confluence around that area. Let me tell you what kind of confluence I will find. Some of the beginner traders that we have in the live stream might be thinking, oh, what kind of confluence you mean? So let's say this is a trend line. So if it goes above like this, I might be thinking this is supporting the trend line. So yes, it is showing me the strength, and yes, this trend line may be a valid trend line. Okay, so I will react in the buy side. But on the other side, if we close below the 200 EMA and this trend line, I can find the confluence in the sell side, which is of course this trend line, and I can throw some support resistance areas. This is also support. I can say, okay, this is breaking the support, and this is the area which was unfilled, so maybe price can tap here. So these kind of self talk that I do when I try to enter in the market. So yes, let's see, this trend line looks good, and let's see in NYS if we breaks and close below this, or we can also go down and still close above, because NYS is a very wild kind of in NYSE we see a very wild momentum. So we do see some wicks here and there. Look at that. I don't know if this was a news or anything, but this kind of behavior also can happen here. So we have to be very cautious. So even if price breaks below all the way, it still can close like this. It will still indicate bullish momentum only. And if we close back in the this trend line, then definitely you can we can go for buys. The point that I'm trying to make here is just wait and see how price reacts in these areas that I have drawn. And what concepts that I use, you might be wondering. Again, if you're a beginner trader, I use very simple concepts: trend line, EMA, support, resistance, some kind of volume candles. So this, that's how I determine my buys. That's how I determine where to enter and how much stop loss I am going to put in. So let's see what kind of what do we call that? What kind of momentum we get in NYSE. Louis, hey, how are you? Hopefully you are good, and happy new year to you, all of our viewers also. Please fund my account. I'm running a loss. I think you should take responsibility of it because nobody's gonna help you. You can only help yourself. So take responsibility of it.
Well done. Well said, Samir. Usman David or David. I'm not sure if this is a serious sentence, or maybe it was a tongue in cheek kind of a sentence, because it's the first time I read it, to me it sounds funny, but I don't want to offend anyone. Maybe someone is actually thinking, it is possible to fund an account that is running in loss just by asking, or that's even possible. We don't do that. You are the master of your account. You should make it profitable, and if you can, then you should work more at your trading skills, at your TA, your price action reading, your strategy, your mindset, everything that comes together, needing you to be profitable. It is your responsibility, right? You know, uh, if only it was so easy. If only we could just erase our debts, or ask the bank, hey, that mortgage I have, please forget about it. It doesn't work like that, right?
Yeah,
Um,
it doesn't work like that.
so, but this is the place we are. I mean, I'm not trying to make fun of you, my friend. I'm trying to put things into perspective, because in the reality, you have to do the work. It is your responsibility. And but we're here. Don't fear not. Like this stream, subscribe to the stream. That might be the very first step you might do in the right direction, and then keep on coming up, showing up. Go to our Discord and ask away. How do I build my edge? How do I backtest? How do I collect data? How do I deal with this or that? And soon enough, you will see that, by seeking, you will find the answers. And if you keep at it, and in a certain, not too long, not too distant future, you'll be seeing yourself, not needing to ask anyone to fund your account, because it will be already profitable. You'd be asking payouts, not for funding of accounts. Um, we have another question here at our stream. Um,
Yeah, we have Jose trades FX. I was unprofitable
on
for 2 years.
Okay,
Yeah, yeah.
okay. Go ahead. Go ahead.
He is saying I was unprofitable for 2 years, but only because of me. At some point, you'll get of it. And yes, I completely agree with you. Me, after losing almost 200 plus accounts, at one point I was like, this is enough. I have to fix it. I cannot do it. I'm tired of it. Then I got numb to doing the right thing, actually, which was following my strategy, or not risking too much, or not risking even too little, because some people are so afraid to take the risk. They might be taking 0.1% on the challenge, or of course on the live you can do that because it's a live account. You can Even if you make some money here and there, that is still yours. But I think you should be comfortable in putting yourself, taking that much risk which is comfortable to you. Of course, if you're testing few things here and there, then maybe you can risk 0.1%. That is another perspective. But yeah, you are right. At one point of time you get tired of it and you look for doing the right thing. You seek that thing, so yes, it is really, at one point of time you feel this way.
I think Jose traits. I think one of the things you should do is feel the pain, feel the frustration, write about it, write about how frustrated, maybe how angry it makes you when you are unprofitable after putting in, when you're still unprofitable after putting in X amount of hours, X amount of days and months into trading. Feel the pain. Why do I say that? It sounds like I'm trying to bring you down. I'm not. Because that frustration, that angry, that um, uh, all of these things that you feel, which are considered negative, the pain, maybe the fact that you feel a little bit desperate or hopeless in the sense, um, keep track of that and make sure you record it well, because if you continue and you're seeking for, you're growing as a trader, and I hope you are, eventually when you start getting being profitable, you have to look back and see where you came from on your journey as you're growing up. That will hope that will fuel your your journey forward, but also it will help you keep disciplined. Why do I say that? Because I think most of us, if not all of us, have a period, a too long of a period, at least to our, in from our perspective, where we are, doing the same mistakes, unprofitable after even trying our best for days and weeks and even months. And once you have your edge, you have done the work, you have your edge, you have your trade plan, you're trading and you're seeing results, you are profitable. To me, what holds me profitable and makes me be disciplined is remembering how I felt when I didn't do the things that I should be doing, when I didn't have a plan, when I didn't execute consistently, when I gave in to following my emotions, when I was impulsive, which is, for me, that's not a good thing for my strategy. And I know exactly how bad I feel, how horrible I felt when things were not working out at the beginning of my trading career. And knowing how bad it is, I know for sure that I do not want to repeat these mistakes. And to me, it helps me. It helps me a lot thinking about how frustrated I was at that period with the process, because it seems to be taking too long. Of course, we know that it takes some time for your mind to adapt and to learn and have good habits. It takes time. So it's not wrong that it takes some time, but remembering about how you felt, at least for me, helped me a lot to maintain me on the right path and not committing those same mistakes and going after trades, chasing, feeling bad about the trades that I had that I executed well, but I still felt bad about it. Now I don't feel bad about it anymore. I understand that this is what I should be doing, even when I lose. I have a losing day, and I have these regularly. Um, I need to just stick to the plan, and I know with data, with experience, that is part of the process. I know that the likelihood of me ending up in profit by the end of the week is very high. Um, and if not, then it just takes a little bit more. But the curve, if you have a validated, backtested strategy, the equity curve eventually will be going up if you've done everything right, and you have edge. Just a matter of time, and you will catch up. and losing is just part of the process. No longer feel bad about it, right? So, but that, remembering about those things is very helpful. Has been very helpful to me. Chihuahua is asking, one is the futures, being offered on the Fivers. The date is not known yet. We don't have the date yet. At least I don't have the date yet, and it's still to be decided. It is coming to the general public in, very soon. So stay tuned, Chihuahua. I like your profile pic, Chihuahua. Very cute Chihuahua right there. Um, so someone asking about COVID. Um, COVID is still COVID still on? Why the mask? Mimit Park. Thank you for the question. It's not about COVID. It's because, I've said it many times. It's a little secret, and I hope you can keep it between you and I, Mehmet. Do not go and tell anyone else. It's only for you and I. But it so happens to be that I have only one teeth left, and I don't want to show that very special teeth to anyone. So that's why I have a mask on. It's a little secret between you and I. Please do not tell anyone. All right. So going on to the other questions we have. That's that one we already,
Equity.
one
Yeah.
tooth.
How are you, bro? Uh, yeah, yeah.
All right. So Arun Mohan is asking Jose trades. Can you tell the exact mistakes? Sure. That is the beginning. How to understand why you're unprofitable, right, is a very broad question, and it needs, an analysis. You need to break down, see whether it's your strategy that still needs polishing, and adjustment. Is it your risk management that is wrong? Is it your mindset that is not at the right place, or is it all of the above, or any other combination? Because those are the things that you need to have in place for being profitable, right? Profitability consistently, not just one trade or two trade or a day. That can be based on just on random trades, and you're still profitable. But a consistent trader has all of those three things in place. Three pillars of profitability. One is having the technical edge, which is your strategy. Um, uh, we can break that down into other segments as well. The risk management, if you don't have a strategy that is profitable, but your risk management is off, eventually you will likely blow up the account. You're at the risk of blowing up the account still. And even if you have the strategy optimized, the risk management adequate, you can still mess everything with the wrong mindset. So you have to have all three of them adequately formed and developed, um, in order to be profitable. Sounds very easy, but it takes some time to, for some people, a lot of time to get there. But it's all worth it. Gideon Mutai says, let's see, Victor is right. 8 months of pain without a penny shaped my journey, and I don't want to go back to that hell hole. Yes, I know it sounds negative. It sounds kind of pessimistic, or, you know, marinating in something negative. But it's not. I think it's positive. The same way as we learn from our mistakes, like they say, pain is one of the best teacher, if not the best teacher. Once you tell a little kid not to touch the stove, and they may listen. But if you let the kid touch the stove, right? Not, I'm not suggesting you put this into action, but it's just a mental experiment. If a little kid touches a stove and they will feel the pain, I'm pretty sure for many years, and probably for the whole lifetime, they will not touch that stove again. And that's the power of pain, and it's there for a reason. It's a good teacher. So feel the pain when you are going when you're still having bad habits, and feel the pain, the frustration, because it will, once you go pass through it, you just have to remind yourself how painful and horrible it was when you were not doing things right, when you're not disciplined, you're not, having a trade plan, you're not following the plan, how it felt back then, and you most likely will not have any interest in repeating that experience. Um, we have a question here. Ola Mile Kanuluwatusin. That is a mouthful. I have probably not pronounced it. I don't think it's even a word. But my friend, long word, long name. Well, you can send a message to support. I'm Yeah, probably best thing is to send a message to the support. Call, check them with on the live on the website, the live agents. But usually, whenever a payout is and whenever anyone is excelling, the Fivers will reach out to you for an interview. That interview is to, so you can be, you can share your experience with the general public. Thank you for that question, but you can take initiative as well and contact us. That would be nice. We have a question here by Naho Mana Nija. What to call the feeling you feel when the market is against you? How to overcome this feeling? I feel like I reduced 1 year or something from my age. Reduced, meaning you became younger. That's a good thing. Um, what to call the feeling? Well, the thing is, you're basically uh, personalizing the market, making making it thinking that the market actually has, you know you're personifying the market. The market doesn't, it doesn't care about us. The market is doesn't have any feelings towards us. It's not, it doesn't have a plan again, it doesn't see us. We are nothing to the market. We're non-existent basically. So it does not help. I know it's very normal and perhaps common for us to think, because we can only see things from our own perspective, from our own, our universe. We are the center of our universe, of course, of our observation, thoughts, and so on. So it's easy to think, it's the world, or in this case the market, against us. But in reality, we're irrelevant to the market, and it doesn't help. How is it called? I don't know, but I would say that's a personification of, we're personifying the market, an innate object, or it's not an object, it's a concept, an innate, you know, abstract concept. You're personifying a concept. So an abstract idea to the market. So it's not useful. It's very understandable to be thinking this way, and we recur to these ideas. That the market is against us, but that doesn't make sense in reality. So the sooner you let go of these ideas, the better it is for you. You have to focus on you applying the trade plan, the strategy, regardless of how you feel or what you think, whether the market is against you or not. The market, that idea doesn't exist. I mean, that concept, there's nothing, no one is against you. It's you against yourself, basically. It's you applying the strategy and searching for the strategy for the I mean, at the beginning, exploring the edge and finding it, and then applying it. That's it. That's it. It's not about you against the market. It's not like if you do this, the market is going to do another thing differently. The market is going to be there doing its thing regardless of what you do, whether you enter or not, whether you risk a lot or less. Totally irrelevant to the market. It's like see yourself as a little. microbe in the air while you are moving your hands, right? You have no ideas of any microbes in the air floating around while you're moving your hands, but they're invisible, but they're there. But they're completely irrelevant to you. Whatever they do, nothing can hurt you or impact you. I don't think uh, analogy is very helpful, but hey, that was the first thing that came to my mind. Samir, um, okay, so how did you overcome this feeling? That was the question. Thank you for the follow up question. It
Actually, the
is by that
point,
relation.
uh,
It, go
his,
ahead.
his question was what to call the feeling when you feel when the market is against you. The point is that from the day one, I have never, you know, thought it that way. My thought process has been different from the day one. Again, I will emphasize, or I will just give you overview about my journey. The people I was learning from day one was giving me good teachings, not only trading, in life also, in other things also. So keeping that thing in mind, I never felt like market is against me. Whenever I did a mistake, I always said to myself that this was your mistake. You could have done better next time. Don't do it. It is because of your fault you are in this position. Everything that happened in my life which was kind of a wrong thing or whatever, account blown here and there, I have always taken a blame on me that it is my fault. So that's how I see trading also. I have never felt, or I have never seen trading in this way where market is against me, or anybody is against me. It is just me, and it is just me who can either make me or who can either break me. That's how I built my foundation. So keeping that thing in mind, I was always focusing on, of course, I was focusing on the wrong thing, like what strategy I can follow, what, this strategy may be better. Okay, this is not working. Let's try that strategy. So this was, of course, the wrong approach. But I'm trying to tell you that whenever I took certain amount of loss or maybe a few losses in a row, I didn't blame market is against me. I blamed, okay, maybe there is something that I didn't do right. Maybe this strategy is not working. Maybe so that's how I my belief system was in trading from day one. So I think again I will say the same thing to you also, that market is not against you. You are doing something wrong. Maybe you are not following your strategy. Maybe some of your checkpoints was not met and you got into the position. That was your mistake. Okay, market is not against you, so nobody is against you. Again I will say, you can either make you or you can either break you. So the decisions are in your hand. Okay, so you have to take the right decisions, and now you know what kind of mistakes you did. This will allow you to take the right decision. If you still don't know how to take the right decision, maybe you will learn in some other way. But as you are in a path of growth, as you are in this live stream, you will learn anyhow. That's what I believe. And yeah, your decision making will improve over time. So that's why the in our house, parents makes the decision when we are small or when we are in teenage. So because they have taken few losses here and there in their life, so their decision making is good. So right now maybe your decision making is not good, so you have to work on it. Like, again I
Yes,
say,
it's
yeah.
changing. Changing the framework of which you work from, right? The uh, it that that framework doesn't is not helpful for you. It's not only not true, but it doesn't help you because whenever you take a loss, if you have that framework that it is someone against you or the market or whatever, then what be the consequence of having that framework? Um, that you'll feel like some injustice has been done to you, right? Because you think it was done with intention. There was someone with the intent to rob you of your profit. So that's not even, it's not true, but it's will not be even helpful because you will feel the urge to do something back, right? React upon the loss you had. But in reality, it's all about you. It's about, if you're not having profits, if you're not consistent in the market, the only responsible is you. It's not the market. It's not the liquidity providers, or the liquidity seekers, or anything, any other agent than yourself. It is you that you didn't either, you don't know your strategy well, you didn't make sure that your strategy is robust enough. Maybe you measured some profitability in the past, but you don't have enough data to see that perhaps it's only periodically profitable. It will have periods where it's unprofitable, and maybe that unprofitable period has now started on your strategy. Even while you do everything right, you do the risk management and your psychology part perfectly well, your strategy may be in and out of profitability depending on the season, so to speak. Um, but that's your responsibility to make sure that your strategy is robust enough to be traded. And some people trade without even back testing, right? It's not the market in that case. It's you. It's or whoever that person is. You who didn't make sure that your strategy is profitable. And other, for example, in the risk management, a lot of people trade 1%. Sam, for example, I think you trade 1% risk. Um, but you have data. It's based on over 200 accounts being blown up. You have enough data to back you up what works and what doesn't. For some people, 1% could be okay, could be part of the plan. For others, 1% could be way too big of a risk, because the fluctuation, the drawdown will make you hit max loss limits. You will be losing the account even if you did everything correctly, just because the risk was too high, right? And if that happens, that's not the market, that's you. That's your responsibility to make sure what is the optimal risk position sizing for the given drawdown of your strategy. No one else is responsible for that. So it is it's not about the market against you. It's about you making sure that you did everything that should be done to make sure that you are trading within the edge with an adequate risk and with the proper mindset. When you let go of that faulty framework and you just have a more healthy way of looking at the market, you understand that losses are not bad or good. Losses in themselves are, they're not bad or good. What makes them bad or good is whether or not you follow the plan. That's what makes a loss good or bad. So you can have a loss which is perfectly good. You can have 5 losses in a row which are perfectly good. Why? Because you follow the plan. That should be the right framework, whether or not you are executing the plan as it should. That's it. Your job here is just to come to the market and execute the plan. Win or loss is almost irrelevant from that perspective. Obviously, it is relevant because you are here to make profits in the market, but you cannot focus on the profit. You need to focus on the process. And that should be the right framework. Focusing on the process, not on you win or lose. So when you hear a trader talking about how their day went, and they say I had a
Yeah.
bad day because I had 2 losses, that's actually not the right framework to think out of, right? It's whether or not you follow the process. The trader should say, I had a great day today. I follow my plan to the T. It happened to be I had 2 losses, but I follow the plan, right? If a trader would say that, that's a sign that they're operating from the correct framework, where they're not result based but process based. Hopefully that helps you to overcome the feeling of the market being against you. Noha mana ninja. Uh, all right,
Jeff
so
has
let's
really
take
said
another.
a
Go ahead.
nice thing actually. Jeff has really said very nice thing. I have mastered the art of losing so that I can become profitable. It is hard, but you have to master it definitely. And if you have mastered it, it's really good, you know. It's really good. That is the only way actually. Get comfortable with losses in trading. I know I'm saying it just very easily. I know it is hard, so we all are showing you the right way how you can do that by just building some kind of habits here and there. And yeah, so again, us 30, I wanted this type of momentum only. Why? I already explained you the thought process. 200 EMA way too extended and price is overextended, so I want that pullback move. So if I was, um if I was trading today, I would have taken this sell definitely. And what is this? If it closed bullish, then this is my buy setup actually. Of course, on the 1 minute there might be some pattern, but now I am trained to see on the 15 minute as well. So I would be taking this type of trade, something like this. If we close bullish in 10 minutes, but we have to wait, and this also we need to wait for a closure, which is again in 9 minutes and 56 seconds. Let's see how it does. And gold, yeah, yeah.
While you are talking about the NYS Open, I'm gonna take a little break and I'll be right back.
All right, no problem. All right, guys. So, gold, I know you love gold. So, what my thought process on gold is, I want this liquidity to go, man. Why? Because there is fair value gap on the daily. Let me explain you why I want this low to be gone. As you can see, there is a very beautiful fair value gap. Let me zoom in if we already have tapped it or not. I think we just tapped by we tapped by like 0 point, we tapped like with micro pip. I want a decent amount of tap in it so that I can get comfortable in taking longs. Of course, if we close above this area, then this might be a sign that I think this touch was enough for it to push higher. And how will I know that it will go higher? I will just wait. I will just wait and see if price is closing in my direction. So I remember when we was having our strategy session, everybody was sharing their strategy. In that session also, I told every one of you whatever strategy you are following. Once price comes to your area, just leave it for 30 minutes. Leave it for 30 minutes and just see how it is behaving in that area. So let's see, this was your resistance or order block, whatever you want to call it. Wait for some time, rejecting, and it just gave you a very nice bearish candle. Now you can take your entry confidently. I don't really focus on a big risk to reward. For me, 1 to 1, 1 to 1.5, that is enough. So this kind of behavior, I think you need to adopt in trading if you want good payouts, frequent payouts. So that's how you can do the things. But on the other hand, us 30, we have to wait for a closure of this candle. I would love if price close below this EMA. It is just psychological trade, to be honest. There is not much technical supporting this. It is just a little bit of experience, and that's how I know 200 EMA is way too above, and we have a level we might can retest this. Of course, I'm not going to be targeting this huge. So let's see. I remember somebody was asking about oil. So let's see. I think I did some analysis on oil. Yeah. Let's go to the daily time frame. I don't trade this pair, but let's see. Let's do some analysis here. So we are having support, of course, as you can see, supply demand support. You have multiple names, man, nowadays, but this is support or maybe demand area, whatever you want to call it. And we have a pattern right here which is some kind of losing momentum. Price is losing momentum right here. So now I do think if price gain momentum, we can go short. If price gain momentum to the upside, we can go long. So we have to wait some big candles, then only we can react. Right now it is not really a good area to take trade from, because not because none of the like not even buyers are taking price to the upside, and sellers are also not taking price really downside, which means that we are in a 50-50 zone right here. Why would you want to trade in this zone? I have done mistake couple of times anticipating, okay, this is a support, let's just buy from here when there is no strength in that area. Of course, if this was this candle right here, this day you could have bought, or maybe this day as price was showing you first tap and there was some rejections. But now the situation is different. Now price is consolidating. So in this kind of market behavior or market condition, I think you should not trade. And now let's just focus here so I can give you my thought process on this one. We still have 5 minutes left for the candle to close. To take action, we have to wait. And if you have any questions, you can type it in the chat and I will try to answer it. I will just try to answer it. So, yeah. And most of you guys also trade Forex. Let's just focus on GBP USD. It is GBP. Yeah, yeah, it is. Let's go to the daily time frame and let's see what price is trying to do. Man, that's why I don't like Forex, to be honest. If you see from my point of view, I will consider this as a big range. But if you see the US 30, what is this? This is not a big range, this is a beautiful trend. So it is easy for me to position myself in this kind of market condition rather than, let me bring back to, okay, rather than this kind of market condition. I know there are some impulses. We have impulse, we have impulse, we have impulse. I know you can, put yourself in this condition, this market behavior, but I don't really like, Forex, because if you see overall, it is just ranging. It is just, bouncing from one support and just rejecting from another resistance. On the larger perspective, it is there only. Of course, on the smaller time frame, you may can see trends, but anyways, let's just do some analysis. This is a trend line. Price is rejecting from trend line, and price just reacted from this fair value gap. Okay, we have closed bearish, which is a good sign. We may can look for shorts, and what concepts we need to go for shorts. It came to my area, but it is still showing bullish strength. Why? EMAs are bullish and this leg is bullish. So we want price to come below the EMA, and maybe we can take some trend lines here and there. Even if you want to catch the liquidity move, that is fine. What do I mean by that? Price close below, retest, you can take your entry, you can take a small move. It doesn't matter if after this move it just completely go bullish. Okay, so yeah. How do you confirm your entries? Do you consider reversal candlestick patterns? Very good questions. How I confirm my entries? It is in two ways. One is how candlesticks are closing, and the another way is consolidations after the impulse. Okay, so once we have an impulse and we have a consolidation or a correction pattern, this is my one entry scenario. And the other entry scenario is some kind of bullish candles, like for example this was a big bullish candle, and this was a, for example, this was a support turning into resistance, came big bullish candle. EMAs are bullish, so this can be my entry signal, and I don't go for a crazy risk to reward one to one. It goes good for me. So let's see what kind of behavior NAS 100 is giving us. Okay, if I take the trade, it has to be here, which is way too high. So I will just stick with the US 30. If we close below the EMA, so that's how I will. It is just waiting game. And yeah, let's see. Yesterday also it was a very amazing day for US 30. If you see this candle was 8 o'clock. Price, look at this price closed very like bullish candle. Trend is already established, and we have a trend line break also. You can use this information and you can use this in your favor, and I just go for one to one. These kind of patterns that I use, and very easy. You just have to read some market structure, some EMAs help, and some trend lines. That is it. And one to ones, easy. Nothing is complicated in this one. I wanted to short gold actually, but again, I got long from here. But based on that fair value gap I mentioned, and price just gave you a very beautiful close right here, which was 630. I would have maybe shorted it here, but it is still not that much clean. Why? Because we are just in a sideways now. When we are in sideways, it just again comes to 50-50. Right now we was bullish. If there was buying opportunity, would have been good. And we are just sideways. These are small points. Once you follow your strategy, you come to know about these few points, and then you react in that way, like what I have to do and what I not have to do, these kind of things. But you have to stick to one plan for maybe 6 to 8 months, then you will know this is the thing that I've seen a couple of times, and this patterns that I want to trade, these patterns that I want to trade. Okay, so we have Victor here again.
Yes, yes, indeed. We have in about 16 minutes, 15 seconds, minutes and some seconds, Jolt's opening being released, and also the let me check. Let me check
Okay.
here. Let me put it on the screen. We have also the services PMI coming up. They're going to be together in about, as I said, 15 minutes. They can be also a driver for the dollar, and meaning for all the major forex pairs. So you want to be on the lookout for them, right? For whatever news comes out in about 15 seconds. If you have, there are red folders as well. If you have an account on the high stake account, you should be a high stake program. You should be able to, not should be able, you should make sure that you are not opening any trades 2 minutes before, 2 minutes after. And if you're on the other two programs, the hypergrowth and the bootcamp, then those restrictions do not apply to you. All right, so coming back to the charts, what are we? Let's break down EU for those who are those forex lovers out there. Let's take a look. We
By the
have
way, I would
on
have taken this shot if I was having the account. I mean, I do have the account and I'm already up like 6.8%. I don't want to risk my withdraw,
okay,
which is in about 6 days. So, yeah, I don't want to risk my withdraw. But this is the trade that I would have gotten involved with, definitely, because the
six
concepts.
percent process. You're waiting six
Yeah,
days
yeah.
to get your payout, and that is on one account or all of your accounts. I think
It
you
is
have
just one
more
account. I
than.
lost my account in December, so I again got funded, with the fivers, of course. So 100K with the fivers. So let's see. And yeah, I will just update us, our viewers, about my journey. I would
Nice.
I would love to give you the insights, like what barriers that I faced in past, or what barriers I'm facing right now, what right things I'm doing and what wrong things I'm doing. I'm completely
Hmm.
open about it. So and again, I'm saying this type of trade I would have definitely 200% I would have taken this trade. So of course can be a stop loss, because again I have taken few wins here and there. This was also winning session, this was also winning session, this was also, yeah, there was 3 4 wins, and then I took a loss, I still remember. Anyways, you can give our viewers insights on euro USD, and this is just a paper
Yes.
trade for me.
Before.
Let's see.
Okay, so you're not actually trading this on your
No, no.
account because you're waiting. You have 6% profit on your 100K
Yeah,
account. On the funded account, basically you have 6,000, of which 80%, which is 4,800,
yeah.
is actually you after
Also the refund,
profit
the fivers
plus
give
the
you refund
refund.
also, guys.
Yeah, so 4,800 on waiting to be paid out in 6 days. So you wisely say, well, I don't want to. That's a that's a good performance. I want to keep it. I want to cash out before I take any more risk. That makes a
Exactly.
lot of sense. This is your moment to get payment, and so you don't want to be risking that. You well done, Samir. We have a question from Carlos Nino, who is asking, I think you, because you were talking about your strategy and whether or not you're using reversal candlesticks for your entries or confirmations. Carlos is asking, do you use RSI divergence as a
Mhm.
further confirmation before you enter a trade? Do
Okay.
you?
Very good question. But the point is that I have been involved in the market since almost 7 years now, 6.5, 7 years. I know this type of move is a divergence on RSI. I have not plotted the RSI, but I know on the higher time frame, this is a divergence. I don't really think about it, but again, that is a lagging indicator. If you're a beginner, definitely you can use that as a confirmation. But let me put it for you. I don't even know, but I am sure this will be a divergence on the RSI because just based on some experience. I don't know why RSI
You have
now.
to take off the EMA. You have to take off the EMA indicator first.
Oh, okay. I thought we can insert two indicators. So, anyways, oh, it has already inserted. Okay. So, as you can see here, right now, we have divergence, right? Look at this and look at this.
Mm-hmm.
So, this is just some kind of experience that I have. So, I don't use it. But if market is failing the momentum and it is going up, it just clearly, it means there is some divergence on the RSI. You don't have to look at it. But if it is failing the momentum and there is price trying to go up, there will be some divergence, definitely. Not 100%,
Actually, the
but 90%.
actually the candle where you entered has closed, if I can see it clearly,
Yeah, yeah,
above the previous high, right? So the chart is going up. The candle that you exactly that the candle that you the entry candle, I think there was a close up there, which was higher. There's a higher high on
yeah,
the
yeah,
chart, and on the RSI, if you plot the trend line on the RSI, you see that
yeah,
it is a lower high exactly. And on plotted on using the two lines, the purple line you have, the horizontal line plot that high with the second high, you'll see that on the chart it's going up instead of down, and that's you without plotting it, you know that it is divergent from the market, and
yeah, exactly.
the market is reacting, as expected, in continuation with that move. So that's a beautiful call right there by Samir. That comes with, indicators are to help you see the market, right? To help you see the market. Sometimes you can see it without the indicator, without the need of the indicator. You understand when you have, for example, a breakout, you can use EMAs to see, how strong that breakout is by looking at, how what EMA is it bouncing off, right? Whether it's the 20 EMA, the 13 EMA, or the 8, or whatever it is that you use, or the 5. But you can also see it with your eyes and see this is quite strong. I should do this, or I should, act differently. And without the indicator, but you see it. The indicator just quantify it a little bit better for us. All right. So unbiased trader is asking here, would my long DAX between 6 and 8 a.m. and my short DAX between 9 and 11 a.m. considered hedging? Not at all, my friend. That would not be. Oh, are you holding both of them? I suppose you are. If you are, then yes, it is hedging. But hedging is okay. I mean, if you're doing it in one account, intra account, then it's okay. No problem in hedging. There's no problem in nothing. There's no rule against hedging in one account. They're based on
Yeah,
different
yeah,
strategy, hence different stop loss TP points, but risk trade is same for consistency. Unbiased trader, my friend, hedging is allowed. So, and if both of them are still open, I think that's what you're inferring. Then yes, it is hedging. It is considered hedging, but it's okay. Hedging is good as long as it's both trades are on the same account. If they're on different account, of course that's not allowed. You're not allowed to be hedging using one account and for one trade and the other trade on another account. So let's take a look at someone asking about Mr. Status Bar, asking about gold please, Mr. Status Bar, I see there are four messages saying the same message that is called spamming, and spamming will risk you being timed out in the chat. So my advice to
Let's
you
see what
is
Google is
to
doing.
don't take that risk. All right, let's take a look at the EU. EU has flipped. I was
Let's
in a
see.
trade short on EU. I closed it for a little loss because I saw the market, change direction, and I will tell you what I mean by that. Let's first go from the top down and see. This is the monthly time frame, as you can see on the charts. We
Actually,
are,
it is
we're
my chart.
coming.
You have to put in your chart
Ah,
in the screen.
yes, thank you for letting me know. I forgot, and it should be showing anytime now. And there you
Yeah, now
are.
it's
All right. So thank you, Samir. So we do have visuals here. We have the monthly time frame. You can see that we're coming from a downtrend, lower highs consistently. We seem to be had a fake breakout, but we continue on that trend. However, that breakout trend line that was broken was retested here. I know this is the monthly, but it's important to understand where we are to have an indication. Are we able to, expand? Which side is it going to be expanded? We have a range now on, a huge range. It's the monthly. It's all the way from February 2012, 18. In that range, we have a quasi left shoulder, head, neckline, broke it. First right shoulder, the extension of that pattern. There's a possible second right shoulder. The fact that we broke, they had a fake breakout, and then the confirmation of breakout trend line here would make you think, as a breakout trader, that this move will is likely to push out of the market, right? That's what it takes. It breaks the trend line. You likely think it's um, gonna be retesting this, at least this, and possibly going to the next level. However, on the time frame, on the range, we can see reversal patterns that we're getting close to an important level. You have the left shoulder, as I said, head, and the quasi that I explained, or you know described. That quasi left with two entry order blocks, one here which is quite wide, and the other one which is much tighter, much nicer to trade. And by the reaction, by the way the market reacts to these levels, it can give you a preview or a hint at which, what scenario is the market, are we going to break out of this range or not, and by the reaction it has on these levels. So let me zoom deeper. We had a couple of reactions. This is the first reaction, big bearish candle, but didn't have follow through. The second one created a bearish order block. Let me indicate it here. We created a bearish order block based on the second retest, and we are retesting that fresh order block. So that's my main point. That's the main thing we want to be. That's the takeaway for this time frame. We are retesting a fresh bearish order block. We go to the weekly. The weekly is not a switching bearish yet. This is almost a bearish order block, but it's not. It's not confirmed on multiple price feeds, so I don't have it here as a bearish order block, meaning these two candles. Now, so you're looking for the weekly time frame to give you indication that we're turning south, that we are breaking bullish structures and creating bearish one, and we're not doing that yet. Even though we are below, we have gone quite some space below that order block, but it's not closed yet, that candle. So we don't know how it's going to close by the end of the week. It may just close as a big wick and price is shooting up, changing things completely. So you want to wait for the close of the current candle before you can take any action and consider the current order block to be invalidated. It's still moving. Don't want to be trading that. So basically, the market might be giving us a sign of bearishness by the end of this week, in 2 days, 3 days time, 2 days time actually. But we have to wait for that, right? So the weekly is uncertain, maybe going to switch bearish. It looks like it wants to switch bearish, but it's not there yet. We have to wait for that. On the daily time frame, we have to ask yourself, do we have an alignment on the bearish alignment with that possible weekly, and that's certainly monthly time frame that is telling us. Well, are some indications of bearish alignment. There's a bullish pattern as well, but I'll leave that aside for a minute here, just not to confuse everyone. You have a left shoulder head neckline, breaks all the way down to the extreme of that pattern, and it comes back to one of the entry order blocks short on that quasi. Has a reaction, didn't exactly trigger here, unless you use the pin bar as your entry. I don't. And then it comes back for a second retest, and has a bigger reaction. Now this reaction is a bit more tail telling. Why do I say that? Because it actually broke some structures. You see here, this is the head. If you go deeper and look for the possible quasi, what do we see here? We have a quasi at play. You have a higher high, higher than that one. So higher high, higher low, established uptrend. That means that this is the neckline. It goes all the way and takes out. Let me double check here that this is yes, it is clearly the neckline. And a quasi, I mean, that means that we have a daily order block or a neckline. Daily neckline here, right there. There we go. So this is the pattern. Very easy, nothing too complex. Established uptrend, breaks the neckline, and now we're waiting for price to come back to something between this point and that point, the head of the pattern, to continue its path. Maybe it doesn't need that. It's going to go without coming back to anything. That happens sometimes, but a lot of the times it needs a little retrace and comes back in. Let's mark the 50% retracement. And we have one area here that is not valid for me to be traded. There's something else on the chart that I haven't spoken about, which is this bullish order block that has been invalidated yesterday. That's a bearish sign, obviously a bullish structure being taken out. That's a bearish sign. And the market, what does the market do, right? We talk about these structures all the time, the phenomena where a structure gets flipped, meaning it's a bullish structure, but once broken, it becomes a bearish one. How do you see that? This is the bullish order block that should, right? It should make price go up, but it does not, right? And what does it do here? We have price on the 1 hour. You can see it clearly. Price breaks through the line, right? So it breaks the line. Let me mark it here. And you can see how the market comes back to it, and it works as a bearish structure instead, because this is the order block, right? The order block that I just mentioned is that's the order block. It breaks through it. First time it was just a wick, but the second time it closed below it, and now it's no longer let me mark it as such, right? So you can understand what I'm talking about. Once this candle on the daily time frame closes below the order block, you can see that the lower border of it becomes a resistance line, right? So that the level is that orange level, the orange line here, which stands at that's 702 or 17024. If you go to the hourlies, you can see that line again. Once the market breaks it and closes, this is the close around here, it closes below this daily order block line, which is, you see it 17024. I have it at 5 right there. It becomes a resistance line, right? The market goes to it, to the line, almost to the pipette, and then moves away. Why is that? Because of the flip structure. You see that all the time, and it may have a position, a reaction to it all the time, but that's fine. All right, so let's continue with the top-down analysis. So we have a daily sign that the market is continuing bearishly. breaking the quasi, breaking the bullish structure, using the bullish structure as a supply zone. But is it enough for us to get in on this move? I say we have to wait for a either the expansion of this quasi so that this order block becomes a valid one, or price comes back to retest this. It seems like it's weird because we're expecting price to go up while we are actually bearish on the market. But that's how the quasi work. That's how the market a lot of the times work. It, even if it, after breaking the neckline, it's indicating, it is telling, giving you signal it wants to go lower, but before it does so, it goes up to some structure of supply to then go lower. And it sounds counter intuitive, but that's how the market works. Not all the time, but a lot of the time. A lot of other times it just continues without retraces, right? Without forming a right shoulder. So the daily time frame is showing us bearishness, but we need to wait for a retrace into somewhere that makes sense as a supply. That could be this area, or it could be the one above us on the daily. Let's go to the 4 hourly. Do we have a reason to go short here or not? Let's take a look. I don't have anything here. As you can see, there's no fresh order block. There is actually, we took a trade yesterday, or actually I didn't take the trade. It was a setup of which because it wasn't in my time, I couldn't take the trade. It hit TP afterwards. But if I were in that trade, I would have closed it a little bit before the actual close. Actual TP, I mean. There is a fresh order block here, which we could expect market to push from. However, the daily and higher time frames are telling us that the market, well, it could push from here, but is currently bearish. So we have a reason to, if it doesn't have a proper reversal from the current area, it's most likely just to continue to push lower. It will have to start a reversal, and I'm not seeing it yet. There is one reason, which is this H4 order block, which is one reason. But if you look for the quasi here, the quasi on the H4 is all the way, the neckline is all the way up here, meaning actually the quasi, that's the 2 hour. The quasi on the 4 hour is all the way up here. On the 2 hour, it's up here. None of those have been broken. On the H1, let's take a look. The H1 is also, the neckline is also here, meaning we haven't broken any structure indicating a possible reversal. It can still happen, but it's not very likely, meaning if the market is not reversing, then automatically I would assume that it's gonna go sideways until further it gets further impulse into one direction. Maybe NFP will give that, or it will slightly keep on going lower, which is likely to happen. But perhaps as NFP is nearing, it will start being compressed and going sideways, waiting, taking that waitful stance before the news. And I now see that we are out of time. So let me wrap this up on the hourly. There isn't a clear quasi on the bigger picture to the left. Let's see on this area as we are coming back to retest the H4. Let's take a look at, is there a quasi here, and where are the important lines? The quasi is this line right here. So in order for it to break structure and to indicate to us that we are going to go up, it needs to take out this level, which is 1.17027. And I personally would be waiting for price to come back to that area whenever the highest point it reaches, to come back to this area to get my entry. Meaning this would be the entry for me. Right? Not H4, H1. And that gives me a little of a little area here of interest, which needs to be retested for me to be interested. Very selective, as you can see. I'm happy letting the market do its thing, and I'm not part of it as long as I follow my plan. That's the only thing I'm interested in. Me following the plan. and the market looks this is a outside bar after two bullish engulfing being printed. So this looks quite nice. It looks like we're going to be pushing forward and pushing higher, even though on the left side I said earlier there is no quasi. But now this changes. There's clearly a order block. This is the quasi bullish order block being retested, and there's another one here again, retested, and it's pushing forward. And there's acceleration here, but keep in mind we just had news at 4. So the services PMI and also the jobs opening. So that is the reason why the market is having, that's the that's the news that came out. Price tapped into the area and is showing strength right now, even after the initial reaction was bearish, but it needs to take out this level. That's not a quasi, that's not an order block. That is actually, this is the level that it needs to take out on the 1 minute for it to break the structure to the upside. Actually, on the micro, on the and it actually already closed above it. So that changes that's not a good sign. But this is the level. This is the structure that the market needs to take out before we can start thinking. Okay, so this is going to go up. This is the level right here. That's the structure that needs to be taken out. Whenever we are above that level, the market will consider the bearishness to be muted, and we should be able to go. That opens the door to go to have higher prices. And if we're not able to take out this level, then eventually we'll be coming back. We'll be moving towards some demand area we have below, perhaps this area. But I'm interested in this area to go long. All right, that's it for us. Let me double check here. Any last? I know I took a long time, Samir. Any last words before we you have a lot to say. I don't know. I don't want to limit.
We have
Go ahead.
covered a lot of things, psychology wise, strategy wise. So I hope you took lessons from it and start to, build good habits in trading. What do I mean by good habits? Is don't overtrade, stick to your trading plan, stick to your risk management. Only these things can make you go ahead. Okay. So with that being said, guys, it was lovely for, and thank you everyone to you who are watching us, and see you tomorrow. Same energy, same live stream, same education. So of course not the, same education, same energy, we should call it that way. So with that being said, guys, so take care, we will see you tomorrow.
All right. Don't forget to hit the like button. Subscribe to the channel if you think this is helping you. If you, even if it's, if you have you're already past the level of education you are in trading, the level of experience tells you that this may, you already know a lot of things that we are talking about today. If you think this is a good companion, because this is also important, right? The trading an activity as a profession is a quite lonely, and you think that we are being a good companion to you, please hit the like button, subscribe to the channel, and don't forget the Discord community. We're having weekdays, on every weekdays, a workshop, one coming up in about 40 minutes or so. You don't want to miss that. So that's it for us. See you guys tomorrow. Bye bye.
Take care, bye bye.